Today we're doing an open house so you guys can kind of see what it looks like when we normally do this stuff on Tuesdays. All right, so essentially what we do every Tuesday is kind of what it looks like. We basically put together a trading idea presentation, right? So people get a chance to present, what it is that they want to build this week, whether that's something new or whether that's something that we've built in the past and they want to kind of change some things up. Then we do a vote to see what we want to build today. So I'll basically make a poll, we'll send it out, and then we'll actually build the algorithm, and then we'll usually tweak it. And then if you guys want, you can get and run the code afterwards. If you want to get the code, you need to be a pro plan or an all access plan subscriber if you actually want access to the code. So step one, we're going to do a trading idea presentation, right? So does anyone here have an idea for stuff that they want to build? Is there anything that you'd like to develop? Let me know if you guys have some ideas of what you guys want to work on today. So in the past, we've done a lot of different options algorithms. We've done a lot of different price action algorithms. So if you guys have something that you want to work on today, let me know.
Sorry, I did not prepare anything because I thought we're gonna discuss Iron Condor. That's
Okay.
based on last Tuesday discussion, right? So I'm not sure if that's still the plan or we're gonna just go, back into the
We can
usual
do that, definitely. I
routine.
can put that as part of our poll to work
Mm.
on the Iron Condor strategy. For those of you guys that don't know what that is, it's basically an options trading strategy. We've had some very good success with it in the past. So the Iron Condor strategy is something that we talked about last week, essentially to work on. It trades options, and I think last time we did it, it's probably the best performing strategy I've ever seen in my life. I think we got something like a 250% return at some point. Although it does blow up every once in a while, it still has quite extreme returns. So I'll add that to the list.
Thank you.
Yeah, and I know we're saying that I don't know if Irv is going to be joining today or not, because he's been working on something himself as well. Okay, so Iron Condor. Is there anything specific that you want to do with Iron Condors, Alex?
Oh no, not particular in particular. I was just trying to recap what we discussed last week.
Okay.
So I really came unprepared this time.
Okay. Yeah, no problem.
Sorry about that.
Yeah, sounds good. Okay, so we got Iron Condors on the list, which is essentially, again, it's an options trading strategy. It looks something like this for those of you that don't know. Condor. If you guys trade options, it essentially looks something like this, right? Where we buy a put and we buy a call, and then we sell a put and we sell a call, and essentially we make money if the price of the stock stays in the middle. So we've done this before with NASDAQ and the SPY and had some very good results in it. And one of the advantages of an iron condor is that it can make money both in bull and bear markets. So it's kind of agnostic to whether we're seeing big declines or not usually. Cool. What else would you guys like to work on? Anything else you guys have in mind, that trading strategies that you've been using?
I was thinking of doing forex scalping.
Forex scalping. Okay. What in particular with forex scalping?
Say it again.
What in particular for forex scalping? Like how would scalping work? How would you scalp?
Pretty much using the MA. Let's see. Got some notes here. Using either the MA, average crossover, the RSI, or status graphic confirmation. Stochastic.
Stochastic confirmation. Okay.
And just whenever the moving average goes above the lower one goes above in that sense.
Okay. So so I guess so you know what exactly would be happening to the moving average? What exactly would be happening to the RSI? And why do you find this interesting?
Done some trades with it before, and I've seen some people, doing them. And just seems like a fun, fun one to do because you know you're not focused on it 24/7. You're there, you're doing it,
Okay.
as in
So
doing it by itself instead of you doing it. So it's again, it's only like 60% you get profit a year, depending on how you execute it. We use indicators, the 25 to 50 period. Then set stop loss. I'd say trading hours should be in the peak hours, so during the morning up to maybe 10 or 11. Those are only times we should be trading. We can leverage with it, which is cool too if you got the right aim for it.
okay. Is
And
this a strategy you've tried trading yet?
yeah, I have. There's one time, again, it's a hit or miss, especially because it's your own stresses with it, right? Because you're like, oh, it's gonna go good, and then it doesn't, and then but one time I made a profit of $80, timing it right, with only putting in, I think, what it was like $5.
Okay.
A
Yeah, you
huge,
can definitely use a lot of leverage in Forex in general. You can also use a lot of leverage in options too. I mean, they're both pretty highly leveraged. Um, okay, cool. So you traded it once or twice before?
yeah, and then just we would enter a buy trade when shorter term moving average, crosses the long term moving average. Then if the RSI is oversold conditions, you would buy a signal. It's technically going based off volatility.
Okay. So do you have specific values for each of these things? What value of moving average, what value of RSI you'd be looking to enter and exit?
For the moving average, I would do 25, 50.
25 and 50s. Okay. Days, weeks, months, minutes.
It would be in the 5 minute mark, 5 to 1.
Okay.
1. Work with
Okay.
that.
Okay. So like 5 minute candles, 1 minute candles. Okay. Cool. Sounds good. Um, anything else you want to talk about that or any examples of this that you have that people have been using this or anything like that?
Examples. I was trying to pull it up. Just got back from work, so I was kind of brushing.
Hmm.
um, let's see. Guess we can use this video for now.
Forex.com, the #1 Forex broker.
Give me a
The
second.
Fed is raising the interest rates, signaling trading opportunities.
That- I'll share my screen. Just a fast paced right now, but just showing his profits and everything.
So what is it that we're watching here?
This is one of the scalping based off of the things I was saying.
So this is someone doing scalping
Yeah, someone
on
doing it.
YouTube?
Yeah,
Okay.
yeah. It was just like an example. I know it might be fast paced but we'll see. Pretty much as soon as it starts heading to the reversed, or you would sell a put, a pip, or if you can do it both ways, or just one, just going down or up, depends on what our options.
Robert, to maximize everyone's time, so why don't you pick a topic that you think would be relevant to us and show us how to do it?
Okay. So are we supposed to be hearing him speaking or something?
There again,
Are we supposed to be hearing him speaking or something?
I don't think so. It's just yeah, no. This one right now is just like it's just showing you what's going on. He's just buying and selling right now, but in there he has his EMA, no, his MAs and RSI. He's checking everything. It's just as it's going down. I guess anyone can show you a picture, right? Did you want me to find something where he's talking about it, or?
No, I mean we're just looking at graphs moving, right? Like because I'm wondering, how what the setup is, like how he's doing this, like what the specific details are around it, right?
Got
Because
it.
he's like watching a graph, right?
Yeah. Let me stop sharing, and then I'll find a video about it while
Okay.
we do the whole checking it around.
Okay. Sounds good. Cool. Anyone have any questions around that too? Like what would be involved in strategy or anything like that, or any thoughts, comments on that?
Rob, is Lumibot able to see the book, the order book? That's very helpful in Forex. I mean, a lot of times you'll see the offers disappear before the price rises, or is that too fast for Lumibot to process?
It's definitely not too fast. We don't have that built in right now to read order books, but we could implement something like that. That's definitely possible. It just depends on the broker if they provide that information through an API, right? So that's like a per broker thing. We could actually look into adding that, but as of right now, we don't do that now.
It just seems that for the strategy you were doing last week, and I don't know, did you guys end up finishing it and getting a test of it? It seemed like if you could tell that the offers were starting to disappear, that would add a level of extra, not certainty, but conviction toward your long position. And same thing with the shorts. So that was the only thing I thought of with all of these um, scalping strategies is, can you watch the order book change first?
Yeah, I think that'd be very helpful for that too. I definitely agree with you on that. Yeah, we don't currently have that. And to back test that is, I don't know any data provider that has historical order books, right? That's quite detailed. Maybe they exist. I just don't know of them. So yeah, I think it'll be very interesting, but there are some things that we have to find the data and we have to implement how to actually read the order books as well.
Well, if you can read it, you wouldn't really have to do much back testing. I mean, when the bids disappear, the
Yeah.
the price will go down. So I think you'd only have to test maybe what your latency is, but yeah, just a thought.
Okay. Yeah, it makes sense. Yeah, we could definitely take a look into something like that. I don't know if you guys would want to help find some sort of data sources like that, but yeah, and it depends on the broker too. Like I don't think Interactive Brokers provides provides order book details, for example. Neither does traders for options and stocks. Alpaca, I don't believe, provides it either, right? So it'd have to be a broker that actually provides an order book through an API, which I think some crypto brokers provide it, for example. So we could do that with that, and maybe some Forex brokers that, like Forex specific brokers might provide that too.
Well, if you were going to operate in, real markets, you might actually want to go to the exchange directly because they're
Yeah.
more likely to have that API than a broker per se.
Yeah, that makes sense. That makes sense. Okay, cool. All right. Any other thoughts on that, or any other strategies you guys want to work on today? We have the Iron Condor strategy. We have Forex scalping. Anything else that you guys would want to build today in terms of strategy?
Well, I had an idea like kind of along those lines of the order books, but I was thinking option order flow, like calls versus puts the day before. Like if calls greatly outnumbered the puts the day before, then you could go long the next day. Or if the puts greatly outnumbered the calls the day before, then you could go short the next day. That
Okay,
data,
so comparing volume between the two.
yeah, that data, I'm not sure how we would ascertain it, especially through an API, but it's
I think we
something.
might have it. I think we get it from Polygon. I think we have that information actually.
Oh, okay.
Yeah. Sounds
Order
interesting.
flow. Yeah.
Have you ever seen anyone using that kind of a strategy, trading with that kind of strategy?
Yeah, I've seen a lot of people do it. I watched a seminar on it one time, and there's sweeps, and then there's blocks. So there's different forms of people doing a lot of calls or puts. And if you have both of those, that's a high likelihood. If you have, I think, blocks and sweeps, you have a high likelihood of price going in that direction.
Okay, interesting. Yeah, I've heard about people trading blocks with options, how it's like there'll be a wall, for example. It's like there's, no activity, and then all of a sudden at one price point, there's a huge amount of open interest, right? I've
Yep.
heard that can have some influence on markets too. Okay, cool. So I'll add that in. So we could do a option put call volume comparison strategy that maybe you could trade stocks or options on that. Do you have any like specifics around that, like how much we could expect in terms of returns or anything like that?
No, the one guy that was teaching the class said he had like an 80% win rate, just waiting for sweeps and blocks. So I thought that was pretty impressive.
Yeah, it is pretty high. Okay. But that's specifically sweeps and blocks. So what exactly was he doing specifically?
Um, I'd have to go back and watch it again to actually be able to give you concrete details on it. So yeah, just kind of a general idea right now. I'd have to do a little bit more research in order to maybe have more detail on how to implement that.
Okay. Okay, sounds good.
But it's good to know that info is possibly available. So it might actually be something that we could possibly do. Usually you have to watch the screen and just watch the screen all day and see if the option order flow comes up. But maybe there are some type of data providers that can provide that for us. I'll do some research there.
Okay. Yeah, sounds good. Yeah, I know we can get, or I'm pretty sure that we can get volume for options from Polygon. Open interest, I'm not sure if we can get open interest. Yeah, I don't think we get that information, but I'm pretty sure we get volume. So we can at least use that,
Okay.
Cool. Any other ideas, guys? Anything that you guys would want to work on? And by the way, welcome to everyone who's new here. If you guys have any strategies that you have in mind, that you've been working on over the past few years or months or whatever. If there's something that you'd be interested in exploring, let us know too, for those of you that are new here too.
Greetings. I know I got here kind of late, so I had to get my update on my zone. You guys talking about like arbitrage trading?
We have not spoken about arbitrage trading yet. Is that something that you're interested in?
Yes, sir. Yes, sir.
Okay, so what in particular for arbitrage?
Is that on the crypto side?
Okay, so how would you go about doing the arbitrage?
I mean, that's what I'm here to learn. I'm here to learn to find out this information. Yeah.
Okay,
To this, yes, sir.
okay. Yeah, I know back in the day, I actually built an arbitrage bot that made quite a bit of money. What we did was we basically hooked up to like 20 different exchanges, and we were constantly monitoring the price between them for Bitcoin and Ethereum and all the top coins. And there's usually pretty big price differences between them. So like we used to be able to just hit like buy, sell in our app and actually made like quite a bit of money doing that. I like literally made $1,000 doing that one day. Just sitting there until I got yelled at by the CEO. But but yeah, that used to be very possible a couple of years ago. Let's say in something like 2016, the crypto markets are pretty inefficient. These days, I think arbitrage opportunities are a lot harder to come by. So if you have anything in mind, we'd have to specifically dig into that. The best stuff that I've seen is around these decentralized exchanges, things like Uniswap and that sort of thing. I've heard that there's some pretty big price discrepancies between sometimes Uniswap and like small exchanges for like small coins. I've heard that there could be some opportunities there, but it's not something I've explored too deeply personally. Um, is there anything in particular that you were working on with this?
No, not actually really. No, just we had a couple years ago we had got into some of those rug pull. Yeah, I was interested in just knowing if we could still do arbitrage just with maybe building our own bots instead of relying on somebody else and they pull the rug. So I was like, well, if I could just build my own bot, I could just do it myself instead of relying on, another somebody else that could possibly pull the rug from me then. So I was just, and I know when I first got information on Luma Wealth, I thought, maybe you guys could build bots for that particular narrative.
Yeah, we build bots for all sorts of stuff. Arbitrage bots is not something that we've built yet. Typically, it's pretty difficult to find arbitrage opportunities. Usually, when they exist, they disappear very fast because it's basically free money, right? So if there's an arbitrage opportunity, usually they disappear very quickly. If you have some sort of bot that is making money doing arbitrage right now, or you've seen something like that on the internet, maybe you could share that with us and we could take a look at it and see if we could replicate it. Do you have maybe like a website or something that
Are
you
you
would use?
familiar with BizGap?
BizGap? No.
They're out of Australia. I know they do some bot, but I don't know if I can get some more information. Let me go into my email and see if I can pull some information. But I think I don't know if they do arbitrage, but I know they build certain type of bots, so they might be, along the same line as you guys. But I had spoke with the gentleman, but we didn't really get too far because I didn't think I had enough money to get into his program. So I don't think that went far, but I know the company called BizGap. I can see what other information I could get in regards to that. However, that's really all the information I know, but I can see if I can get a link or something for you as well.
Okay. Yeah, I'm just looking. Actually, let me share my screen so you guys can see what I'm looking at. But I'm searching for VizGap right now. I see a couple things here. There's like a YouTube channel.
BizGap. Let me look. Hold on. Let me go to mine.
Sorry, what was that?
I think it's with a B-I-Z gap. But let me hold on. I'm gonna go to the
BIZ Gap. Yeah.
hold on. Let me see if I can with a
BizGap.
B.
That's my
B as in
search.
boy.
Oh, B as in boy. Okay. BizGap.
That looked like that was it.
BitsGap.
Oh, there it is. Okay, okay, okay. Yeah, there you go. Okay, yeah.
Okay. Yeah, I've heard of these guys before. Yeah, they have a bunch of different bots in them as well. These are fairly simple bots like grid bots and DCA bots. We've actually built that in the past. Those are fairly simple to build. We actually have one in our code that we've been used that we built a while back. If you guys remember that. Yeah, the trading bots, learn more. I think they only had two different types of trading bots. These guys, their bots are pretty simple from what I remember. They didn't really have anything like too spectacular, you know.
Okay, so grid bot
The
is
bots are
basically,
pretty simple.
so the grid bot and DCA, those are the bots that's out right now that we can build.
Yeah, grid. We have a grid bot that we actually have done in the code, and all a grid bot really does, if you back test it, it doesn't increase your returns. All it does is make things a little bit more stable. A DCA bot basically just means you're just depositing, on a regular basis to buy something that's not really much of a strategy. And then BTD bot, I've never heard of this one. I don't know what a BTD bot is. But these are all very, very simple. Like we've built these, none of these actually make that much money
Oh,
from
they
what
don't.
back
Okay.
testing. They're all pretty basic. They actually have lower returns than just holding on to Bitcoin last time we checked it.
So what do you recommend if I was into something? I mean, like I said, I'm still, it's new to me. So I mean, that's why I'm coming to you guys. What would you recommend as like something that you guys are doing right now as far as your platforms you have available? Because I'm new, I'm green to this, so I'm new, I'm very new to this.
Well, I mean, that's kind of what we're getting at today, right? That's the whole kind of point today. Like I mentioned earlier today, something that I'm personally very interested is an iron condor trading bot because it had really good results. Last time I back tested it, it had like triple digit returns, with quite low drawdowns. So that's something that I find very interesting. It's very rare that you'll find anything that can make triple digit returns per year. These bots, steady gains from futures market volatility. Yeah, so these are just bots that just trade. Like when something goes up, it sells, when it goes down, it buys. Like really, really basic stuff. And none of them, to my knowledge, make any kind of meaningful amount of money. There was another one, I think it was like Polynex or something like that had a bunch of different crypto bots, some of which were making like, double, triple digit returns. I thought that was kind of interesting. And they had different types of bots in there. We could actually copy some of those. But these are quite simple. These are like, we've built these before and they didn't have any kind of returns that was impressive to any degree.
Oh, that's good information to know. Thank you.
Okay, yeah, no problem. Yeah, I don't know what what that other bot was. They had this BTD bot. I don't know what a BTD bot is. Profits. Buy low. You stay ahead of the market and take advantage of sudden price dips before the market corrects itself. But designed to work valuable tool any time. I'm said buying process. So when the price drops,
Buy the dip.
yeah, BTD, buy the dip. That makes perfect sense. Yeah, buy the dip bot.
Yeah.
Yeah, these are like super simple. Like, I mean, they tend to reduce volatility. That's the one thing that I thought was interesting when we did the grid bot last time. I don't know if you guys remember that. But the grid bot was like the returns are quite low, but it was more stable than Bitcoin, which is kind of nice. Okay.
So that technically would be worth getting into then. That wouldn't be, you wouldn't recommend nothing like that, basically.
Sorry, what was that?
So you wouldn't really recommend getting to that, dealing with that platform.
I mean, it's up to you. I mean, you could do whatever you want. I personally don't find it interesting at all.
Okay, no, you gave me the best information. Yeah, I'll take it. Yeah.
Yeah. To me, it just seems like very basic stuff, but like a DCA bot, basically it's just investing on a regular basis. That's, you could just set up your bank account to do that, right? A grid bot is just buying when it goes up. When it goes up a bit, it sells. When it goes down, it buys. I've actually been
Rob,
testing it. KuCoin.
Rob, what were the returns like in your grid bots?
They were lower than Bitcoin for the most part. Like when we did a grid bot on Bitcoin, for example, it depends on how you set it up. There's a lot of details around the parameters,
Sure.
but generally speaking, it had a lower return than Bitcoin, but it was a little bit more stable. That's
So
all it really was.
like, it was a little bit more stable. It wasn't like it got 15% return over the course of a year with zero volatility, right?
No, no. If it was something that good, then that would have caught my attention.
Okay,
It wasn't
thanks.
that good. I don't remember the exact details, but it wasn't that good. If it was that good, I would be saying very different things. You know, that definitely would have been interesting, but it wasn't like that as far as I remember. It's something that we did I think like 3 months ago or something.
So,
Okay.
quick question. So basically, would it be more advantageous to get into the stocks trading platform on this app and not really sway away from the crypto? And
I
the
mean,
stock-
I'm not an investment advisor, so I'm not going to tell you where to put your money. I could tell you that me personally, what I do with my money is I'll have maybe 5% of my cash in Bitcoin and crypto. And the rest of it is in stocks or options. Like crypto is highly volatile and doesn't have a very long track record. If you know, for me, where I put my money is I like to have something that has a longer track record and that has a strong economic reason for going up in price. The reason why Bitcoin goes up in price is because demand and supply, whereas the reason why stocks go up in price is because they're actually producing value in the economy. So it's a very different kind of thing. When you're trading options on that, there's certain ways that you can change your risk profiles on things. I find that very interesting. But when it comes to Bitcoin and crypto by itself, you know, I personally don't have like a large chunk of my money in that. You know, and this is coming from someone who built a crypto exchange and a brokerage firm, and I'm heavily involved in the industry, and I still wouldn't put that much money in. You know?
okay, so you basically say you really just do the stocks and options with the bot building bots as far as building
I
bots.
find those to be a lot more profitable. It's where I keep the majority of my money. Yes.
Okay, thank you for that.
Yeah, no problem. Cool. Okay, so we got a couple of ideas here. We have iron condors. We can continue that. We spoke about that last week too. We have Forex scalping. We have this option put call volume comparison. I guess we can still flesh that out a bit more. And then we have exploring arbitrage opportunities for crypto, which we don't really have. We're not connected to any brokers right now that I think would have too much arbitrage opportunity, but we can kind of look into that and see where we're going with that too. Any other questions or any other ideas that you guys want to develop today? Okay, cool. So what I'm going to do is I'm going to send out this survey and you guys can go ahead and vote. So again, we have 4 different choices. We have the Iron Condor strategy, which we've historically had some very good results with. Back testing, personally, I want to actually start running that live this week. We have the Forex scalping strategy, which we're talking about, you know, which Larry is bringing up. We can basically buy and sell based on RSI and moving averages and all that. We have the option put call volume comparison, which, you know, I think maybe we could flesh out a little bit more, but it sounds like an interesting idea. You know, I've heard a lot of different strategies where like option volume and things like that can have a pretty big influence. Then we have exploring arbitrage for crypto. We can, again, I don't think we have the tools to fully execute on it at right this moment, but we can definitely look into the details of what that might look like and what exchanges we want to do that on and whatnot. All right. So if you guys can vote on that, we got 5 people voting so far. We have 10 people, so we have a few votes left. So if you guys can place your votes. right? We got 8 people. We're missing 2 more. Although it's starting to look pretty heavily one-sided. Yeah. Actually, I guess 10 would be including me. So we're missing 1 person. But you know what? Even if that 1 person did vote, it wouldn't really make a difference. Let me share with you guys the results of the poll. We seem to have a pretty strong consensus. So we have the majority of people voting for Iron Condors. I personally wouldn't mind voting for that too. I actually want to run one of these this week personally, so I wouldn't mind kind of getting further into that. Then we have Forex Scalping came in second. So Larry, maybe we could put a pin in that and do that another week as well. You came in second here, so I think that maybe we could do that next week or the week after. And then we have Arbitrage for Crypto coming in 3rd place. And so I guess worth you didn't even vote for your own idea is the option put call volume comparison.
No, I think that might need a little bit more research first. I voted for Iron Condors.
Yeah, makes sense. Makes sense. Yeah, it sounds like we need to look into it a little bit further before developing it. Okay,
Okay.
cool. So that brings us to part 2. So again, so for those of you guys that are new, this is basically how this class goes. Step 1, which we just finished, is trading idea presentations. Everyone's had a chance to present their ideas. We've also done the voting. We voted for what we want to build. Now, next step is building an algorithm. Then we're going to tweak it and we're going to get the code to run, right? So we're going to build an algorithm here. After we finish building the algorithm, we're going to tweak it and try to modify it to see if we can get it to work out better. I guess today, since this is a strategy that we've built in the past, we can kind of get to the tweaking part faster. And then we will get the, you know, if you guys want to get this code to run, you would have to be part of one of our plans, which, by the way, if you guys want to join this class on a regular basis, get the code and actually run this stuff yourself, there's the pro plan available, which is $249 a month. You get this class along with the code. You can join us every week. You also get workshops, trading signals. You get to join a Discord community, Python for Finance course, and we also included now our algo trading course as part of this. Which, by the way, for those of you guys that are part of our pro plan, that should be included now if you guys want to access that. And then if you guys want to join our all access plan, it has everything that I just mentioned there. Plus, it has all the courses, including our options course, our AI course, our blockchain course, and all that. We also have weekly office hours we do every Thursday. And then we also have 2 one-on-one hours per month if you join that class as well. All right. Cool. So that being said, let's kick it off. Let's actually start building some stuff. So I'm going to pull up our option strategy. We have a few Iron Condor strategies that we've actually built. We have the Iron Condor Martingale strategy that we built. And then we have an Iron Condor strategy that's more that basically just rolls the options on a regular basis. So, and we also have Irv's Iron Condor strategy that we've been working on. What are you guys most interested in? Maybe I could run some of these back tests too and show you guys what they look like. So here's we're on the cues. Back test this one.
I wonder if Herbs has the most optionability on it. Maybe we should work on that one if it has the most options. Or is the more
What do you mean the most options?
like, I'm not sure how any of them really work, but maybe with Herbs we could either roll or use Martingale, or maybe we could, I don't know, but I mean, he was a fund manager, so I would imagine he's got some pretty good ideas on the code he's working on. I think he likes to roll and also readjust his options automatically is what he was talking about. So that might be something interesting to be able to do, kind of an automatic adjustment based on the price movement.
Okay. So here's his code. what he built. Let's see what kind of parameters he has. His option duration, how many days until the call option expires when we sell it. Strike step size, delta required. It looks like he actually modified some stuff that we built back in the day. So this is actually, I remember building this. Delta required, the delta of the option is sell. Roll delta is when we're rolling. Maximum rolls. Distance of wings. Budget. Strike roll, different distance, max loss multiplier, roll strategy short, delta threshold, maximum portfolio allocation. Okay. Well, let me download this code and maybe we can run it and see what it looks like when we run this thing directly. We can kind of get a result of where it's at right now.
Yeah, maybe we could run it and back test it with some different different parameters.
I have a question.
Sure.
So would you put in like your parameters into the system first, and then you would kind of, I don't know if you're like running it in conjunction with this code? How does that work with the stock market software system that you're using?
So during this class, what we do is we build new strategies from scratch, usually.
Okay.
Right. Today we're going to be using something that we already made in the past. So it's all code, right? So it's all software code that we're using here. Now, in the software code, we have what we call parameters within LumiBot, where we can actually change these things. We can test out, how would this work over the next, or how would this have worked over the past few years, right? So we can test it, see how it would have performed. And if we like it, we could actually run that, and you can run this code. And we have like a bunch of tutorials on how to run this stuff in the cloud and actually like connect it to your broker if that's what you want to do. During this class, though, we spend the majority of time just building new stuff, right? That we'll later on be able to take and use, right? Does that make sense?
Yeah, and so it takes into account, I guess, like the threshold and like when you have to sell the call or the put.
So
It
in
takes
this
it takes
case,
the expiration dates into account with this code.
yeah. So this code in particular, right, that we're looking at here, will
Mhm.
basically put together an iron condor. So do you know what an iron condor is?
Yes.
Okay, cool. So this code in particular will put out an iron condor, and it seems like what it will do is it will roll the iron condor based off of specific requirements. This is not my code, so I don't know exactly how this works. Right, you can look into that.
Oh, okay. I think you just answered my question.
Okay.
When you said you're gonna roll the iron condor based on the specific requirements. Got it. Okay. That's basically what my question was.
Okay, yeah, perfect. Yeah, I think what the typical way, and I think the way that Irv set it up, and we can look at his code. But the way that typically happens is if you move outside the tent, right? So this is, your iron condor, your tent is this middle part here. When it
Okay.
moves outside of the tent, that's usually when it would trigger a roll, right? And then you'd
Oh,
basically
okay,
sell
okay.
and buy and move it over, right? Yeah,
Oh, awesome.
yeah. So it's automatically doing that for you on a regular basis, right?
Right. Instead of you having to monitor it yourself and setting your threshold and knowing when to sell and when to buy. Okay, I get it. Thank
Exactly.
you.
Exactly. Yeah, no problem. And the advantage is too that we can back test it and see how it would have performed in the past, right? So
Mhm.
we can tweak it and make it in a way that we're most comfortable with running it in the future, right? Cool. It's a good question. Thanks, Regina. Okay, cool. So I tried running this martingale strategy. I got an error here. Let's see what happened. I think here's what happened last time. Not authorized. City does not include. I think that I'm getting the wrong. I think I'm getting the wrong keys here. Let me just check up on this so we can actually back test. I remember I had to fix this last time too. Secret key. Oh no, I do have. Oh, you know what? This is why. So we can only go back 4 years. So I'm gonna have to change this back testing date.
It should be 24, right? 2024.
You're right. Yes. Yeah, 24. Good call. Thanks, Alex. Yeah, so in this case, Regina, what we're doing, for example, is we're back testing this strategy. This one's a slightly different iron condor. I just want to run this just to see kind of where we're at. But this is an iron condor martingale strategy. What it does is basically puts on an iron condor every day. So every day at 3:45 p.m., we'll put on an iron condor that expires the next day. And then depending on if you win or you lose, will depend on how much money you put down the day of, right? So you're basically putting on condor on you win fires tomorrow. Tomorrow at 3:45, you have to decide, do I want to put down the same amount of money again, or do I double up? Right? There's this thing here. It says if I lose, I go to 40. This is 10 contracts at first. If I lose, I go to 40. If I lose, I go to 100. If I lose, I go to 250. That's the typical martingale strategy. So basically, whenever you lose, it ratchets it up, so you spend more money. And when we backtested this in the past, it had like, it was like 200% returns. It was pretty crazy.
Oh,
Although it did
wow.
have some pretty big drops, right? So I know that's yeah, it's crazy. It was
What did you do when it won, Rob?
when it wins, you go back down to zero, or you go back buy 10 contracts for tomorrow. If you lose, then the day after tomorrow, you put on 40. If you lose, then you put on 100. And if you win, you go back up to 10. Right? You just take your profits and go back to 10.
Yeah.
Right. So it's fully adjustable for that. Right. So I think this will take some time to back test.
Could you clarify that? So you're only acquiring it for the option that are expiring tomorrow. So that means only because options not available, they only expire on a certain Friday, I believe. Is that right?
It depends on what you're
It
trading.
depends
Right
on
now,
what
if
you're,
you
yeah.
buy, sorry,
Oh,
what was
okay.
that? Yeah, if you're buying like the SPY or QQQ or whatever, they expire daily.
It does. Oh, okay, I did not realize that.
Yeah, yeah. That's a new
That
thing.
was
That's
the
why
hard
you've probably
part
heard of
for
zero
me.
DTE. Sorry, go ahead.
That was the hard part for me when I was trading contracts, like keeping up with the expiration dates and then setting my parameters. So if I'm like between like, I don't know, like 0.10 and 1.6, making sure that it doesn't go over so I wouldn't lose any money. So I
Yeah.
like this because you don't have to monitor it 24/7 and trying to check because I lost like $700 in an option trade one time because I missed my expiration date.
Yeah, that sounds about right. Yeah. That's I think options trading is one of the most benefited from algorithms, because with trading algorithms, you can actually do a lot of that stuff. Like options trading is complicated, right? Even if you know exactly what you're doing, it's like you have to do all the math on it every single day, calculate what you're buying, and then wait until it expires. Like all that stuff is like very complicated and requires a lot of like detail and paying attention to it. Whereas an algorithm
Yeah.
can do all that automatically, right? Which is why algo trading is, I think, very, very beneficial for options. Yeah. Okay, so I got this back test running. So here, by the way, so for those of you guys that are new, here's a back test running. I'm basically checking to see how this algorithm would have performed from the dates of January 1st, 2021, all the way to January 29th of 2024, which is basically yesterday, right? So what would have happened with this strategy over this 3-year time period? And now we can see here the progress bar is slowly going, right? We started off with $25,000, and so far it's up to 25,500. So I made $500 so far in going through this, and it looks like it's been less than a month. So it's actually not too bad, right? It's a pretty good return so far, right? $500 on 25K. So we're talking something like, what is 10% divided by 5? So I guess like almost 2% in a month so far. Pretty nice so far, right? If we do 2% on a regular basis, that could add up to quite a bit per year. So far, right? Okay, so we got that running. I also run Irv's strategy here. I don't know. Let's see, credentials. Let's see if this will actually work. Delete this. Actually, here he has that. Okay, super false. I actually really like Irv's coding. He's very organized. We can run his iron condor strategy and see what results we get from his.
Is there a preferred platform like Robinhood versus Webull versus something else for using this type of system?
Yeah, so what we use is we use Tradier as our broker.
Okay.
And to run our strategies, we use Replit. If you go through our stuff, we show you how to actually run that. But we connect up to Tradier, the broker. And the reason why we connect up to them is they're very, very good with like APIs, right? So they make it easy to do like this algorithmic trading type stuff. And then on top of that, they have really good pricing. So they have this thing that's $10 a month, and you get unlimited option trades for free. Right. So $10 commission-free options trades, $10 a month,
Oh,
which
wow.
I've never seen anyone like that. It's crazy, it's
Yeah.
yeah. Especially if you're doing something like this iron condor strategy, which you're buying maybe 40, 50 contracts a day, right? That's normally, 10 times 65 cents is usually a contract. So it's like, you're saving maybe $30 a day by buying this plan. So quite a big difference.
Hmm. Okay.
So this is our preferred broker that we work with.
All
And by the
right,
way,
thank
guys,
you.
I don't know if I told you yet. I actually was speaking with Tradier last week, and they're probably going to set us up with a plan where if you guys use Tradier, they can pay for your tuition for free, or a certain amount of your tuition, depending on what you get.
Oh, wow, that's really cool.
Yeah, exactly. So we'll explore that whole thing. When they send over the contract and everything, I'll share with you guys. It's like you have to trade a certain amount of options, whatever, and then they'll pay for a certain amount of your tuition.
So that's the normal tuition? You talking about the normal tuition?
Yeah, correct.
Okay.
Yeah, exactly. Yeah, I think they said they can make the starter plan free, and then for the other plans, they could probably contribute a good chunk of it. So make your guys save a lot of money on your end, right? Okay, cool. So we got this running here.
So Rob, are you buying, what are the orders to buy those or sell the options? Are they market, limit?
These are all market orders for now. I wouldn't really want to trade that using market orders in real life, right?
With
For
a
back
free
testing.
commission place?
Oh, I don't think it matters. I don't think
Really?
there's a distinction between market or limit. They do
Well,
have an asterisk on it because it's like if you're trading the SPX, they charge money for it because the exchange charges it for it, but pretty much everything else is free. It doesn't really matter if you're limit or market.
okay.
Yeah, it's a great broker. This is the one that I was telling you about, actually. That you know, if 'cause I know you're really big into interactive brokers, but Tradier has some pretty big benefits for yourself and your clients, right? It's $10 a month off free commission, like commission free options trades is that's pretty significant. Okay, so we got both of these strategies running right now. All options, none. Okay, let's see how this one did. I just wanted to back test these strategies at first with just to see where we're at, and then we can tweak them from there. And what I'm starting to realize is that this iron condor strategy, it's saying it's going to take an hour. Maybe we should actually shorten the dates. So right now we're doing all the way like 3 years. Maybe we should do just the past few months so we get a better indication. About 23, maybe 6-1 or something. I'm going to restart this because it's going to take too long. We won't be able to like make any progress on it. I'm also running Herb Spot here, and we'll see how that turns out. This one seems to be, it looks like it's going to be done in about 6 minutes, but also looks like it lost money, at least with the default settings that he has. So it's down to 20K from 25K. So I don't know what settings he did, how his bot works, but we can explore the details of that. All right. Okay, so it's running now. I think we should have these both done in a bed. Maybe while we watch this back test go, do you guys want to take a quick break while these back tests run? And then I think when we get back in like 5-10 minutes, these things should be finished up. We can discuss the results and how we want to modify it, right?
Okay,
Sounds
Okay,
good.
right. See you guys in 5-10 minutes, right?
alrighty.
That looks pretty good. All right. Hey guys, how's it going? Okay, so it looks like we got some results here. This looks like one of them, and this is another one. This is quite a nice result. I think this is Irv's code. It's a pretty damn nice result. It's a nice looking graph here. Looks like it produced something like 60% over a year. So January 21 to December 21, 63% in the year. It's actually quite nice. It's a very nice return here. Max drawdown, a little higher than stock market. Okay. So this is Irv's strategy. This actually seems like it's pretty good already. Seems like he tweaked it pretty nicely. So maybe what I'll do with Irv's strategy is I'll just we'll try a different time period because this is comparing it to a bull market. I think one of the advantages of iron condors is that they work really well in bear markets too. So let me see how I can tweak that with Irv's thing here. You put it up at the top. There it is. Okay. So 21, let's try 22 and let's see if we get the same result with Irv's strategy. And then it looks like the strategy I was running, this martingale one, it looks like it crashed. It looks like it went up to here and then crashed for some reason. So let me investigate why that's the case.
or maybe it didn't crash, maybe it just stopped trading for some reason. Which seems unusual. Unable to get contract. Private sale validation. Yeah, went up to here and then jumped all the way to here for some reason. I don't know why that happened.
Could that be from the contracts going to zero? Like it ran out of contracts to trade?
I don't think so because we've back tested this before and it was fine. I don't think it has anything to do with that. I think it's something to do with the code. There's some sort of bug in the code.
Oh,
So
okay.
yeah. So I'm just looking to see what's going on here. It says we don't have any crashes, which is unusual, and just goes straight from 8% to 100%. Usually it happens when there's a crash, but it doesn't seem to have happened in this case. Let me see that happening here. Either way, we do see a really good result for Irv's Iron Condor strategy. So this is let's see where we get with that. But I'm gonna also actually, you know what, I should close that. So this one looks like it placed some trades here. Everything was good to go. Cash settled. We actually made quite a bit of money, or we made like 200 bucks, which is not bad. And then for some reason stopped trading. It had a loss. Maybe it's because it's loss. I know we made some modifications to this strategy where after a loss it would do some things. Let me see here. I haven't worked on a strategy for a very long time. Like 3 attempts to create the point. And I think I remember actually fixing this before. Let me see here. Options. Condor Martingale, there it is. This one is 529 lines. This one is 586 lines. This one has more code in it. So what is the difference? Yeah, it looks like it's malfunctioning, right? Because normally what it's supposed to do when it oh, there you go. There's Irv's strategy. This actually looks like it crashed as well. This actually looked like it did pretty well over this time period. Why did that happen? Irv's strategy. Let me see. This one actually seems much easier to fix. So I'm trying to be close spread. There's close spread. Yeah, so it looks like Irv's strategy is malfunctioning as well. So let me take a look at why his is. Might actually be easier to fix. I have a pretty good idea as to what is happening with his. It looks like he has a function called close spread that motion testing. And let's create condor. Get put orders, get call orders, get strike deltas, cost to close position. Cost to close position, get asset price, search next market date, get an expiration date. Okay. But for some reason, he has this thing called get call spread. He didn't really put any comments here as to what that's supposed to do. Roll close status, close spread. I'm just going to remove that then, because I don't know what he meant to do with this. So I'm going to remove that. And maybe next time we speak to Herb, we can ask him what he meant by that. But I'm going to remove it. I'm going to rerun this. Okay, and then as far as the martingale strategy, it looks like whenever it loses, it basically just disappears. So we can basically observe why that's happening.
I was wondering if the close spread is part of that rolling thing, because
Might be.
the
It might
spread
be.
is one side of the legs, right? On the
Yeah,
ring corner, yes,
I
the
think so. Yeah. That's what it sounds like to me, but he doesn't have a function that actually does that.
function.
So I don't know what exactly he was thinking. Without digging into his code deeper, it's
Mm.
kind of hard to, you know, like I'd rather just comment this code out and not use it rather than try to figure out what he was doing. And we could eventually get there, right? But I'd rather ask him, right? Maybe he's just not done implementing. Maybe this code is somewhere, right? We just get it from him. Right. But for now, we can just comment it out and just not use it, you know, whatever it's supposed to do. Then as for the martingale strategy,
So I was wondering if it is really executed live and then it crashes, what will happen to the actual position?
so Lumibot is meant so that if it crashes, it will just try to rerun again, right? So it that trading iteration is basically over, and then it'll just run the next one. It could just continuously crash every single day, right? It's basically what it is. You can actually set it up to send a notification whenever it's crashing as well. But that's why
Would it be dangerous though? I mean, if it crashes and then I think the question is that will it leave an open position and get us in trouble?
it might, unless you set it up to protect it against that, right? You could actually have, there's a thing here that you can put in, go def on bot crash, right? And you just self.sell all. This is one way to protect yourself against it, right? Just if the bot crashes, just sell everything, right?
The sell all take into account whether we're short or long position.
Yeah, it exits any position, whether it's short or long.
Close all the position.
Yeah, it closes the position, whatever direction you're in. The sell all will do that. Right? Or you could have it send you a text message or something if it's crashing, right? So you can manually intervene if you need to. Right? There's a bunch of ways they could deal with that. Right?
You have the mechanism to actually send text messages?
No, but it's very easy to do that. Just use Twilio.
Twilio. Okay.
Yeah, Twilio, or what we've done a lot of times too is set up like Discord bots to send messages, which is very, very simple. If you have a Discord server, go into one of your channels and add an integration, a webhook, right? And then you just get this webhook URL and you send a message to that URL. And that way you don't have to pay for text messages because text messages can be kind of expensive, right? So you could use Discord instead. By the way, you know, you could notify yourself when something's happening.
Mhm.
Yeah, that's also why a lot of strategies, before I run them live, I'll also run them in paper trading for some period of time too.
Mhm.
Right? Because it's one thing to say it's back testing and it's doing its thing. That's great, right? But sometimes the real world can be a little different, right? So you want to back, so you don't just want to back test something, you also want to run it in paper trading for a period of time before you actually like go down that path, you know, or at least before I go down the path using real money, I'll paper trade for some period of time.
Does Python has a built-in code coverage analysis?
You can do that using PyTest. Yes.
PyTest, okay.
Yeah. But then you'd have to make tests for your code though.
I see.
Is that what you mean?
Well, I mean, during the runtime, right? I mean, it explore different branches of the flow of the code
Right.
flow. Right? So, is there a way to actually keep track and annotate that yes, this has been previously explored and this one has, you know? So when we do know that every single branches is mean every single condition that we previously accounted for has been explored, then we know it's safe enough to assume that likelihood of crashing will be very, very, very low.
Yeah, that's actually very smart. That's a very interesting way to approach it. I think I understand what you're saying. PyTest can do that, right? When you run like a
Mhm.
unit test. It's not meant to do this when you're doing over a long time period, but I think it could still cover the same thing, right? Did your test go
Mhm.
through all the details? I think it could also still pull that off. Um, that's the thing, that's the best one that I know of, but I'm sure there's other things you can find too, right? Python is such a big language, so I'm sure you can find a bunch of stuff like that.
Mhm.
Okay, so I'm trying to figure out here why this thing stops. So let me start at this date. We'll go from 6-1. Okay. I'm going to run this Condor Martingale. I'm going to find out what the heck is going on. Oh, wait, this is not the right one. Sorry.
I'm not
It's
sure if this is a dumb question or not,
It's
but
never
is there any extra equipment that is needed to run these algorithms on your brokerage account? Like I could just do this with a regular laptop?
Yeah, you could definitely do this on a regular laptop, 100%.
Okay.
What we usually do, or what I usually do, and kind of recommend most people do as well, is we'll run this stuff in the cloud, right? So there's a bunch of cloud providers. Like one of them, for example, is Replit. We use this one quite often. That you can go in and you can run your code on someone else's servers, right? So instead of running it on your laptop, you run
Mm-hmm.
this on a server that's maintained by someone else, somewhere
Okay.
in the country, right? By Google, Amazon, Microsoft, one of those guys, for example, usually. Um, Now the advantage, you might ask, why do you want to do that? The advantage of that is that when you run it on your laptop or your computer, what if your power goes out? What if your internet goes out? If you have a laptop, what if you want to move it somewhere else, right? It kind of becomes inconvenient, right? Like for me, for example, I have a laptop. I don't like running algorithms off my laptop because I'm moving it around all the time, right?
Mm-hmm.
If I have to worry about closing the lid, then that to me is not a very good thing, right? So what I do is I'll run my stuff in the cloud. These guys have very, very high uptimes that, if a nuclear war happened, these guys will still be alive, or, the server will still be operating. You know what I mean? They're like in bunkers, like literally like underground bunkers made to withstand like, wars and stuff. It's crazy. Um, so, that's where I put my code personally. And
Okay.
you do have to pay for it. It's like $6 a month usually for something like this. But to me, it's very much worth it because then I can move my laptop around. I don't have to worry about power going out. I don't have to worry about the internet. None of that stuff. It's all taken care of for me. Right. So that's the way that I'll usually run it. And I think the majority of people run it that way as well.
Okay.
Yeah. It's a good question, actually. Definitely not a dumb question.
Well, I have an ex that was a software engineer and he used to run bots, but he had a whole separate room with all these modems, and he was like, oh, the room can't get too hot. And I just thought about that looking at all this, and I'm like, okay, is there separate equipment I have to get or something?
Yeah, back in the day, it was definitely like that. These days, you just pay Amazon $5 a month and they'll take care of it for you.
Awesome, awesome. Okay.
Yeah, it makes life a lot easier. Okay. So I'm testing this iron condor. This is the point where it kind of just stopped trading. So I'm trying to figure out why that was happening. So let's see what happened here. We lost money, I lost condor, number of losses there. Reset, set the quantity to trade. So let's see where we're losing this thing. Pause counter is not none. The pause counter is 0. And then it returns. I think it's stuck in this thing. Yeah, this pause counter, self-top pause counter is not none. Pause counter. For some reason went from I think I see what's going on here. Pause counter equals 0. Pause counter equals none. We'll make it less than or equal to 0. For some reason, that's causing problems. Yeah, for some reason, it's subtracting twice or something. I think this should fix it. We'll have our martingale strategy working again. Hey, here's Irv's strategy going. Seems like it lost some money in this year.
I'm sorry, Rob, but it seems like the post counter is supposed to be positive, right? Was that negative earlier?
Yeah, it went into negative. Yeah.
So it should not be negative. I think that's only valid when the post counter is equal to is positive. That's why you're subtracting by 1 until it reaches 0. But the problem is also already negative for whatever reason did not get initialized properly. Seems to be.
Yeah, something happened there. I'm not sure why it went to that point. We can investigate what happened there. But I think this in general will fix it for now.
Mm.
But you're right. Like, why the heck did it even go negative in the first place? That's a very good question. But let's go through this and we can explore. There we go. So there's that. Okay. Yeah, I remember I actually made some changes to this code at one point in time. I just haven't touched this for a couple weeks. So this is kind of trying to understand this algorithm again. Okay, let's see what it's there. Yeah, Irv's strategy so far, it looks like it worked really well over the date range that he picked. But now that we picked a different date range,
Mm.
it doesn't look like it's doing it as well. It's kind of hard to tell here because it's downloading so much data. But where's that? It's downloading so much. This is the thing about iron condors. There's so much data involved, right? what I'll do for you guys too, by the way, is the strategy we get up and running today. I'll start running it as part of our trading signals. I'll get that up and running sometime this week, and you guys will be actually watch this thing trade, paper trading as well, and copy it if you guys want to. Right, so I'll actually get that up and running for you guys this week. That's part of my to-do list, like way up on the list. So whatever we figure out today in terms of Iron Condor, I'll actually get that up and running in the cloud, and I'll put it up into our strategy library too, so you guys can use it.
Now this one was the one that was for a year.
Yeah, we're back testing Irv's Iron Condor. We're doing two of them at a time right now. So one of them is Irv. He's I guess one of the people that is in this class as well, right? He's been working on this strategy, and he made this Iron Condor strategy that adjusts itself based off of if it goes outside of the tent. I'm not sure how far he got with it. We'd have to read this code to get kind of the details, but that's one of them that we're doing for a year. And that's what's happening here. And so far, it seems to be losing money in this year. So I don't know what we'd have to tweak with it. And then we also have another one that we're running, which is this martingale condor, which we've ran in the past, got really good results with. And just there seems to be this little bug with it right now that I'm fixing. So there's two different ones that we're working on.
And the
And this-
martingale, is that the one that was 4 years? Wasn't one of them 4 years?
I changed to be only 6 months.
Okay.
So that we can, because otherwise, if we're going back to this 4 years, it's going to take an hour. And, why don't we work on 6 months at a time? We'll get that to work well, and then we can do a bigger, longer back test later on. Right. So we don't have to wait for so long every time we get feedback. Right. That's what I'm doing here.
I have a question, like when we run it the very first time, right? It's downloading the data. Is the data getting cached so that when we
Yes.
rerun it again, it will just use the one that is local?
Yes, that's
It's
exactly what we're doing.
automatically cached. Okay.
Yeah. Notice here it says loading this from cache file. Right. That's why this is running so much faster than Herbs, which is downloading all this stuff.
Is that because it's a new date range? That's
Yeah.
why it's downloading.
It's different. It's different call option prices and a different date range. Yes. That's exactly why. Okay, so pause counter here, we have 0. Yeah, so for some reason, pause counter started at 0. Pause after loss. Oh, that's why. Because look, I set pause after loss to be 0. That's why. Now I see what's happening here.
Okay.
Pause after loss is 0. I remember
That's why you went to -1 directly.
yeah, that's why I went to -1. Exactly. I think when I tried this, I did a pause after loss of like 1, and we got really good results. But okay, so now we've figured out that bug. This should be fixed now. Let's see if this actually works with 0 pausing. But I remember the pause after loss actually was a very good thing for us to do, because what seems to happen, or at least has happened historically, is there were time periods where if you ran an Iron Condor, you would lose for like a week straight. And one of those times, for example, was when the Federal Reserve started raising interest rates. It was just like, so remember, an Iron Condor, you don't lose if it's up or down. You lose if it's extreme up or extreme down, right? If it's moving a lot, if it falls outside of that tent, right? And if we're used to high volatility, that tent is pretty big naturally. But if we're used to low volatility, it's a small tent. And if something big happens, then it's moving like crazy all over the place, right? So when the Fed started raising rates, that happened, right? We had this massive moves in the stock market. So what I did was I put into the martingale strategy to make it so that whenever it loses, it takes a break, right? So that's what this whole thing is. It's like pause after loss of 1, right? So if it loses today, it won't trade until today's Tuesday, it won't trade until Thursday, right? That's a 1-day pause. Or you can set the pause to be 2 days, or you set it to be 3 days. And when I ran that back test, we got much better results, which makes sense because it's kind of like, okay, we're in this time period where things are erratic. Let's just take a break, right?
Yeah.
right? Like let's step away from it for a bit, wait until the market calms down, and then we can get back into it. All right. And that seemed to have some very nice results with it. At least it reduced our drawdowns a lot.
Hmm. I like that. That would have kept my $700 I lost.
Right. Yeah, because it's when we back tested, we could see that sort of thing, right?
Yeah.
And that has happened in history. And I think it happened last year when they started raising rates, or whatever, a year before that. It probably happened around COVID as well, although COVID was different because we didn't have daily expirations for options back then. But I bet
Right.
you if we did, we'd have the same result, right?
Mhm.
I bet you something like that happened in 2008 as well, right? So it's not that infrequent. It actually happens pretty often. So it really seems to be the case when things are going against you, just take a break for a bit, you know, wait for the market to stabilize, for people to calm down, and then start doing the iron condors again. That seems to make a big difference.
Yeah.
Yeah. That's why back testing is so powerful, because you can see this stuff, right?
Yeah.
Okay. And so far, Smart and Gale strategy is doing pretty well. $25,000. It made about $1,000 so far. This is what, a 6-month period.
Within 6 months.
Yeah. So, but it's not through the whole thing yet. It's about 25% through, and it's up $1,000. So 6 months, 25% of 6 months. So it's in what? That's what, a month and a half or something. It's up $1,000. It's not bad.
Yeah, that's good.
Yeah, off to a good start. We'll see how it ends up. Some of the things I've noticed with this strategy that have the biggest impact is the delta has made this really big impact. What was it? The higher the delta, the more money we made. The lower the delta, the less money we made, but it was safer. Right. Regina, I'm not sure. Are you familiar with that, by the way? Whenever you set up a condor, you want to do it based on delta?
A
You feel-
little bit.
Yeah. Yeah. So basically, you want to find the Greeks for the options that you're doing. And then you want to buy the ones that have a certain delta. Right. So you want to buy, in this case, we're buying the 0.16 delta for the call and the 0.16 delta for the put. And that's how big our tent is.
Yeah,
Right.
yeah, yeah.
Yeah.
And that's the one I was talking about when I lost that trade that I keep bringing up because it really hurt my soul so much. I had those parameters set up, and I was at work that day, and I was like, okay, I'm gonna check on it within another day or two because I think I was in that trade for probably like 4 days or something like that. But I missed it. It went outside of those parameters, and when I went on my Robinhood, it was like, oh, it kicked me out of the whole trade, and I'm like, okay, where did my money go? And that's when
Yikes.
I learned that if I went outside of those parameters and I missed the expiration date, I basically just lost out on the trade.
Yeah.
So
Yeah,
I
that
got
makes
the hard
sense.
way.
Hey, that's exactly why we're building these trading algorithms, right?
Yeah.
Like it's just options, in my opinion, are just too complicated to run on your own. At least these types of option strategies. Like you need to be like a full-time analyst to be doing this stuff if you don't have an option, or if you don't have an algorithm running it for you. It's
And
just
the
it's just
crazy
so much to
part
monitor.
was I started with like 150, so I was doing good.
Mhm.
I just didn't pull out in time. When I got that profit, I should have pulled out, and I didn't.
No, makes sense. Makes sense. Well, so far this strategy is doing pretty well. Look at this. We're 33% through. So it's 2 months, and it's up almost $1.50. That's pretty damn nice so far for this martingale. And that's the zero pause after loss.
Oh wow.
Here's herbs still going, just downloading like crazy. I feel at some point I'm gonna have like every option available to man downloaded on my computer. Okay, so we're waiting on this one, 21 minutes. We're waiting on this one. This one's gonna take some time. Okay, so what do you guys think so far? So let's maybe take a step back. We can have a bit of a discussion while we're going through this. We ran this strategy. This is herbs. I feel like herbs seems to be very highly correlated to the stock market somehow. I don't know why. His strategy seems to be very correlated. This is this is his other one. Same thing. Looks like it's also very correlated, although I guess it's maybe not exactly correlated because look, because it was up here and it was down. The stock market was up and his was down here. And then the market was up here and he was down. So it almost seems like his version of it is losing money whenever the stock market goes up, which is actually pretty good if you think about it, because then we can even diversify this in a larger portfolio, right? We can have maybe just own a call separately and then run this. It's interesting because it loses money when the market's up, but it makes money when the market's down, which is actually a very good thing.
Yeah, recession proof.
Yeah, exactly. Yeah. Yeah, because then you put that in a larger portfolio and you have this thing that makes money when the market's down, and you have this other thing that makes money when the market's up, and you put them together, you have something very, very nice there. So I think that's an interesting observation with Herb's thing here, although we'll see when it finishes off because it's downloading a lot of stuff. Luckily, I have fast internet. How far are we? I feel like I need to optimize Herb's code because he's probably downloading way too much stuff here. Either way, we'll let his run. And the Martingale one is actually doing quite well. This one's like seems to be very consistent gains. I haven't seen this thing go down once. It's just been steadily just going up. Just fantastic. So what do you guys think so far? What would you guys like to tweak with these algorithms? What would you guys like to see? I can tell you some things that I've been playing with. I can tell you when we change the delta, this makes a very big impact because I forget which direction it is. A larger delta, I think, is what makes the tent bigger, so you're less likely to lose. So when you have like these big loss periods, you actually survive those better, but it decreases your profits on a regular basis.
Yeah, it takes longer to get a profit.
Yeah, exactly. The bigger tent means less profit, but less likely to lose, right? Then we have these quantities. This is the one thing that really worries me about this martingale strategy, is that it like doubles up every time it loses. And at some point, it can get quite steep in terms of losses. I personally would love to even chop this off, right? It's like it never goes that far. If it loses that far, we're out. That's what I would personally prefer. Like I don't feel like we need to go that far. That's kind of what I think. There's the pause after loss. This has a similar effect to delta, but in a different way. So again, it's that when you lose, you bow out for a day, right? So again, if it's this highly volatile period, taking more time off actually is a very good thing. However, by setting that to be a higher number, you're out of the market more often. So it also decreases your profits as well, right? So it's like it's risk mitigation, but it comes at a cost, right? And then what else? We're also trading on the symbol SPY. I wonder how this would work on the Qs or something else. I know when Kevin was joining these classes, I saw him earlier today. I don't know where the heck he went, but he was trading the Russell, I think the Russell 1000 or 3000, and that seemed to work really well for him for condors. So we can try different symbols. Days to expiry, this is 1 day to expiry whenever we're running these calls or these condors. There's a bunch of stuff that we could tweak. What would you guys want to see tweaked?
I definitely don't like that doubling down. I agree with you on that. It looks kind of risky
Hmm.
after you get to a certain point.
It
Um,
definitely gets very risky. Yeah.
I mean, I don't know. I'm the type of trader, I like to take out my profits and reinvest my initial investment. I don't know how that translates into code, but that's definitely something I would like to see. If I am getting a profit, I would like to take out my profit and then reinvest my initial investment that I put into it.
Okay, that's interesting. We could definitely code that. Um, what we could do is we can make it so that it takes whatever winnings and puts it into like a very safe ETF. Like one
Hmm.
example of a very safe ETF is USFR, US floating rate, which is kind of like a savings account. It's basically a money market account. It looks volatile here, right? This looks like it's volatile, but if you actually compare it to S&P, it barely moves at all, right? So here is just for example, 5 year, it looks like it's moving a lot, but when you compare it to SPY, you'll see it's like basically just a straight line, right?
Mm, okay.
And what it does, it pays dividends. So this one, I think right now is paying 4% or 5% a year right now in dividends. And it's basically just flat,
We
right?
like dividends.
Because yeah, exactly. It's a floating rate security, right? It's using floating rates. So meaning when rates change, it just pays you a different dividend. That's it, right? So in some ways, it's kind of like if you took your money out and put into a savings account, not as secure as a savings account because you don't have FDIC insurance, but functions almost exactly the same way, right? It's a floating rate security. So what we could do is we can modify the strategy so that whenever it makes a profit, it puts it into this dividend paying thing, right? We could definitely do that.
That'd be cool.
Yeah. Yeah, actually, that seems like a very good idea in general. I don't think we're currently doing that. That seems like a very easy way to increase the returns for the strategy. Because theoretically, it should add on an extra like 4 or 5% a year in returns, at least
Hmm.
the past year or two. That's a very easy way to make extra money with this. So we'd explore that. What else do you guys think? It's too bad that we don't have Kevin or Guy or Irv here because I know they actually trade this strategy as well. Well, how do you normally do it, Regina? Whenever because it seems like you do condor trading and you do that sort of thing. So how do you normally run your strategies whenever you do this?
I haven't done it in a while,
You haven't done it in a
to
while.
be
Okay.
to be honest with you. And the coding, this is new to me. I was doing it old school, like before COVID. I was putting in my trades using what did we use? We used Robinhood and Trade America. I was doing
Great
putting in
America.
my option trades, and I had somebody else walk me through it though. But I was basically I learned all of my Greek, the delta, and setting the parameters. What I looked for, I was doing foreign currency, so I was trading with the euros. And for me, I was paying attention to how long I had to stay in that trade, um, what parameters I needed to be in between. And I think the other third thing was my expiration dates. But the other what I got stuck on was they had like certain steps you had in order for you to sell when you wanted to get out of the trade. And I did like two of the steps and missed one of the steps and I got stuck in the trade and that was another trade that I lost out on. But before I go into a trade, I'm looking at the market and seeing, because I was just doing currencies, but I'm
Mhm.
looking at what's going on the news in that particular country, whatever currency that I'm buying into, and basically just seeing how long I have to stay in the trade and how much of a, I'm trying to predict like how much of a profit I would get if I stay in it for this amount of time as opposed to a longer amount of time. I don't like to stay in trades for too long because then I'll get busy. I have a lot of stuff going on. I'll forget about it because this is
Yeah, that
something
makes
for
sense.
me to do on the side. It's not. I'm not like some of like the doctors and stuff I worked with where they have a big old monitor in their office and stuff and just constantly watching the NASDAQ.
Yeah, makes sense. Is that what you do? You work in the medical field?
Yeah,
Nice, awesome. What kind of thing do you do in medicine?
nursing.
Oh, very nice, cool, awesome. Thank you for your service. I feel like nursing is a very difficult job and definitely appreciate your work.
Thank you for that. It is.
Yeah.
It is.
I've had a lot of friends that are nurses over the years, and the amount of hours you guys work is just crazy. So like I
Right.
very much appreciate what you guys do.
Yeah, those 12-hour shifts can wear on you. I've kind of taken a break because I'm doing in-home care now, taking care of my mom and my grandpa right now. So taking a
Okay.
break from being in the hospital for now.
Okay, that's good. Nice. You get a little bit of a break. I
Yeah,
hope they're all right, you know. I hope you're doing that things are okay with your grandpa and your mother.
yeah. They're just getting up there. We all are though. Time is going
I,
by so fast.
I hear you on that one. I just had my birthday over the weekend and people kept asking my age. I'm like, I'd rather not talk about it, you know. You know?
Well, my
Um,
daughter will be 23 on February the 9th, and all my friends are like, wait a minute, what? I'm like, yeah, she's gonna be 23 now.
That's crazy. Yeah. Oh man. Time flies, huh?
Yeah, it does.
Yeah.
It really does.
Yeah.
How popular is the trade air? Is it a high volume platform for brokers, or is it pretty
Yeah, I mean,
new? Because I never heard of it.
Tradier is a very specific kind of broker. They don't tend to advertise towards retail customers. What they
Okay.
usually do is they partner up with companies like ours and will provide APIs so we can use them. So probably the reason why you haven't heard of them before is because they work behind the scenes, right?
Okay.
They don't
Okay.
usually advertise directly to customers, but they've been around for a long time. They've been around, I think, over 10 years now, maybe 15 years. They're
Mhm.
quite a large company. They just acquired another company. They're going to start doing futures trading soon too. So they're quite large. So yeah, I'm a big fan of theirs personally.
Would you say that their platform is pretty user friendly?
Yeah, I mean, I think it's pretty simple. I can log in and show you what it looks like.
I usually try not to ask people who do coding those type of questions. Because my user friendly and you guys user friendly is two different.
Yeah. I'll show you what it looks like. It's pretty straightforward. It's not like a complicated thing. So here's I only put $100 into this account. I'm opening up an IRA with them, so I'm gonna actually put like a reasonable amount of money in there. But
Okay.
here's I've been playing with their paper account because we've been testing this stuff out with them. And here's what that paper account looks like. Right, it's pretty simple. If you go in here to place a trade, you search for a symbol, SPY, for example, or sorry, this is search for orders. Place a trade, SPY. Do you want to do an option? Do you want to do whatever? If you want to do just a stock, it's really simple. Do you want to buy? How much? Market or limit, day trade, whatever. Submit. That's it. It's very simple, I think. They
Yeah.
don't have like all the fancy chart stuff. Like if you,
Yeah, that's what I'm looking at
yeah,
now. Like I like this better than Trade America.
yeah. If you're looking at like TD Ameritrade or something like that, they're like sometimes a little crazy, right? Like so much stuff going on. There's all these charts and whatever, and that could be useful if you're doing a certain kind of trading. But we work with Tradier specifically because they make it very easy for us to connect to them, and they're just like a really simple and cheap broker to use, right?
Mhm.
If you want like these fancy charts and stuff, you can still use TD Ameritrade to do that, right? And then just have your algorithms running on this. So what I'll tell a lot of people is, they'll ask about a specific broker and like, how does this thing function, whatever. The truth is that you need to have a different brokerage account for every bot that you're running. Because whenever you run a bot, it tends to take over the entire investment account. Now, when that happens, you're not really going to be in there trading stuff, right? It's kind of just doing this stuff on its own. So it means
Mhm.
personal trading can stay with TD Ameritrade or Robinhood or whatever you're using, but the bot trades in this, right? And this thing is kind of managing itself, and you just let it run and do its thing, right? That's the way that I trade. I have like personally, I think I have like 10 different brokerage accounts. Actually, more than 10. What am I talking about? It's like
Mhm.
literally like 100 different brokerage accounts if you include like paper trading.
So if you were
But
doing the Irving and if you're doing the Irving, if you're running that code and then you run the Martingale, you would have one like on Tradier and then one on Robinhood. Is that what you're saying?
yeah, what I would do is I would have you could have multiple accounts of Tradier, right? So I
Mhm.
actually have two accounts of Tradier. I got my wife to just open up another one, and we'll probably open up a few more. And I'm going to run one strategy per account, and
Got
those
it.
things just
Okay.
run themselves, right? And I could check in every once in a while, see how they're doing, right? And then I have my own personal account, which I use Schwab. It used to be TD Ameritrade, but it's now Schwab. And that one I do like kind of, for example, discretionary trading, right?
Mhm.
Where right now I'm buying, for example, call options on Coinbase because I just think that, crypto is going to go up a lot in the next few months. That's like discretionary trading and kind of things I do on my own. So I separate my algo trading from my like personal, discretionary kind of trading accounts, if that makes sense.
Yeah.
Yeah.
Do you guys have a code for crypto trading?
Do we have a what for
A
crypto trade?
code, a algorithm for crypto trading?
Yeah, we have a bunch actually. We have ones that trade based off of Bollinger Bands. We have ones that trade off of EMAs. We have like a custom ETF one. We have a bunch of stuff that trades crypto. Yeah.
Is what crypto platform do you recommend?
My favorite is Kraken. I really like Kraken because they're pretty low cost. They have a lot of coins, and most states allow you to trade with them. I think the only one that doesn't allow Kraken is New York at this point.
Mhm.
Um, so yeah, so I'll use Kraken. I like Kraken a lot. And I also have some money over at Coinbase as well, personally. I just like Coinbase because I think they're like a good broker overall. I think they're easy to use. The only problem with Coinbase is that they're kind of expensive, right? Their trades cost a lot.
Yeah, their fees are a lot.
Yeah, the fees are very high. Yeah.
I just heard of this new one, which is Gecko, that I guess everyone is using.
Yeah. Well, I guess for starters, what state are you in?
I'm in Tennessee.
You're in Tennessee. Okay, so I think Tennessee is pretty open to most of them.
Yeah.
Um, I personally really like Kraken. I'm a big fan of Kraken. These guys are great. Another good one is maybe crypto.com. They have this thing where if you get their credit card, they give you free crypto trades. It's pretty
Mhm.
cool in that case, right? I think like these would be my favorites.
I was following Kraken actually when they first came out because I think they were like one of the first platforms that
Yeah.
offered IRAs with crypto, which I thought was kind of different,
Oh,
but
really?
yeah.
I didn't know they allow that. That's fantastic.
Yeah.
Really.
I, I think I got some type of email or something about it.
Hmm. Yeah, Kraken's been around for a very long time. They're one of the first exchanges that came out.
Mm.
Like Coinbase, Kraken, Binance, like these guys came out like at the very beginning of this whole crypto thing.
Yeah, I like Binance as well.
Yeah, Binance is good. The only problem is that now it's gotten harder in the US to trade with Binance.
Oh, really?
Yeah, if the guy that owns Binance, CZ, if he ever steps into the United States, he's going straight to jail, basically. He owes the US government like $6 billion. So if he ever step foot in the US, he's going directly to jail, which
Oh,
I think
wow.
is a little ridiculous. I don't know why the US government is so against crypto, but I don't know, whatever. It is what it is, right?
Yeah, because it's not regulated, that's why.
That's what it is. They just want to control it, right?
Yeah,
Same as anything in life, right?
right. Oh, that's what it's I Trust Capital. They're the
I,
ones that offer the crypto IRAs.
I trust.
I Trust
Never heard of these
Capital.
guys. I've never heard of these
Yeah, I
guys.
heard about that. She's right about the I think IRAs or something like. Yeah, I heard
Yeah,
something about. Yeah, she's right about. Yeah,
they kept sending me emails about them. I thought it was Kraken, but it's that one.
and they
I
said you
Trust
can make
Capital.
money on that. I guess you can do it. They got some type of way you can do a passive income. I guess, tax free. What they say, but don't quote me.
Yeah, well, if it's an IRA, then it is tax free. Absolutely. That's cool. Okay. I like the website. This is fancy looking. I've never
Yeah.
heard of these guys. Well, these days you can actually buy the crypto ETFs that they put out. Like those you can buy with an IRA now too, just through like a regular broker.
I just wonder if there's, you know how when you go on certain websites, you can go to the bottom and look at all the credentials and stuff down there to make sure it's an official website. I just wonder if they're gonna come out with something like that for crypto. Because I just seen like a documentary on where these guys like made up a website or whatever. It's like on Netflix. They made up a website and a coin and all that. And it's like hard to decipher like what's legit and what's not.
Yeah, I definitely agree with you on that with crypto. I think that's one of the biggest problems. And, that's why they're cracking down a lot on this too. Like I built a crypto company personally. This I don't know if you ever heard of Voyager. Is a
Hmm.
Coinbase competitor at one point in time. We got really big. We were worth like $3 billion at one point in time. But
Oh
then
wow.
and then when what's it called? FTX crashed, we basically went along with that,
Oh,
right?
you were a part of that?
Yeah, yeah. So this is a company I helped create, Voyager Digital. Yeah, there you go. I was like a founding member of this company, or at least like I was employee like number four, right? It's very, very early stage of
Oh,
employee.
okay.
We built this thing from scratch, and it was like a Coinbase competitor, right? So we went from building this company out, there's barely anyone on board, and then it blew up. The stock went to be worth like $3 billion on the market. It was like, holy crap, my
Mhm.
stock options went through the roof. But then what happened was, what was it, 2 years ago now? FTX collapsed. And when FTX collapsed, it took a bunch of stuff with it, which one of the things that went down was a company that owed us $650 million. They
Oh
borrowed
wow.
money from us and then blew up. And now we're short $650 million and basically took our company down.
Whoa.
Yeah. So unfortunate, but it was pretty cool. It was a fun ride. It's whatever. My stock options still did pretty well for me, so I was still happy about it. But yeah, I went through the same thing. The crypto industry is crazy. I personally think that it does need some regulation, so I don't totally disagree with these guys because the amount of people that get scammed by this stuff is ridiculous.
Oh, I
Honestly,
was
it's
one of
every
them.
day. Sorry, what was that?
I was
I was
I
one
was
of them.
I was one as well. I was telling you about me. I got scammed from the arbitrage training.
There's so much that's going on. It's frustrating, right?
Yeah.
Here we go. We have two people here in this call, right? It's nuts. But then my mom got scammed by this too. My brother-in-law got scammed by this. there's so much of this nonsense going on crypto, which I think this is why they want to regulate it, right? Because like there's just
Yeah,
people literally stealing money, right? It's one thing if you invested in something and it went bad, that's one thing, right? But it's a whole different story if someone just steals from
right.
you, right?
Or
So
you just get locked out of your wallet. That happened to me with like two different wallets where my password just didn't work anymore. And I'm like, wait a minute, what?
Are you talking
yikes.
about like the treasure wallets, like the treasure wallets you talking about?
No, I had a Coinbase account and I got locked out of it and kept sending emails and yeah, my money was gone and they wouldn't let me reset my password and I just had to take the loss. And then I also started with Litecoin when they first got started and Ethereum. I was with Ethereum when they were doing crowdfunding and got locked out of that account as well. And now Ethereum has totally taken off. But that's the risk you take. It's investing, so it's always a risk.
Yep.
But I knew FTX when people were saying they couldn't get into their accounts. I was like, oh, I knew FTX was about to go down.
Yeah. That and he went on Twitter too. He's like, "Oh, everything is fine," and then 2 days
Nah,
later, yeah,
That's just part of the hustle. You know, you got to keep everybody. You don't want everybody to panic. So that's just the hustle. You know,
yeah,
unfortunately.
absolutely.
I mean, we can laugh now, but we're crying back then. Well, I mean, that's the main reason why I'm looking into Luma Wealth, because that way I can build my own without worrying about trusting somebody else to me throwing my money into somebody else's hands. You know, that's why I have really big interest in Luma Wealth.
Absolutely. Yeah, I think that's a big selling point, right? Like I'm not taking your money. You're giving it to a brokerage account. I mean, it's all about the algorithms. You're absolutely right about that.
Well, you're also teaching how to, you're teaching someone how to build this, yeah, that's awesome.
Yep. That's literally what we do. You're absolutely right about that. Yes.
yeah. It's gonna get to the point where we're all gonna have to be our own banks. I mean that's coming,
Yeah.
and you're gonna have to manage your own money.
Yep. Okay. So I don't know if you guys saw this, by the way. So here's a back testing result of what we ran. So we ran this martingale strategy. This actually looks like a very interesting graph to me. And the
Well,
reason why, so here in the blue is the martingale strategy, is the one that we ran. And the yellow is the S&P 500. And what's very interesting about this is how steady it is.
yeah, it just ran straight through the market.
Yeah, basically it's going straight up, right? 17% in the year. That's quite a nice return. Sharp ratio is very high. So it's making quite a bit of money. The drawdown is almost nothing, right? The stock market had a 10% drawdown from here to here. This thing had not even a 1% drawdown. So it's like very low risk, very high returns, or high returns, 17% a year is quite nice, but what I'm thinking, so what I started running while we were talking, by the way, is I adjusted the delta. And the reason why I did that is because, and I don't remember which direction it is. I think going down made it higher leveraged, right? And we'll see that in a second here. But this thing seems like it take on more risk, right? Like we're not taking on enough risk here, is what it seems like to me. Because if we took on more risk, this slope of this graph would be steeper, right? So instead of 17%, it could be like 25%, right? So I'm running that back test right now. But this Sharpe ratio is phenomenal. Almost a 4 Sharpe ratio. That's very high.
Robert, do you know if the QQQs follow through the same type of result, or have we ever run this on the QQQ?
That's a good question. I am not sure. I think we ran it at some point in time on the Qs. I don't remember what happened. But we could definitely do that. Right now we're running 2 things at a time, so I'm gonna wait for us to finish. This is Irv's strategy. It's taking quite a while because it's downloading all this information. It's sure as heck is downloading a lot of stuff. Yeah, look at that.
That was a beautiful equity curve, though. I mean, I think that's the smoothest one we've ever seen yet.
It's beautiful, no? Like that's crazy. If I can make 20% a year like this, I'm down, you know?
Sleeping well at night.
Yeah, exactly. You know?
A visual representation of it right there.
Yeah.
That's a
Yeah,
great
exactly.
start for trying an algorithm out. You know, I'm not looking to hit home runs. I want singles, just consistent singles, you know?
Yeah. Yep. I hear you on that. Yeah, the only problem with this one is I know when I've ran it over longer time periods, there are time periods where it has like these really big losses. So it's like very, very stable and it has big losses. But a lot of it has to do with this, right? Because it doubles up, doubles up, doubles up, and eventually puts out like these crazy amount of contracts. So I think if we cut this off and say 100 maximum, or even we change this schedule a little bit, right? Maybe it's like 10, 20, 40, 80, and then we stop or something like that, right? We could avoid those big losses and we could have this very steady equity curve. Doesn't matter if look at this, market's down, doesn't matter. Market's up, doesn't matter, right? It's like just constantly making money. To me, this is perfect. I would love to have a strategy like this personally. The one thing you got to be aware of is that this produces tax implications, right? So you probably want to run this like I'm personally, I want to run this in an IRA account, right? Because then you don't worry about taxes. If I'm making 20% a year consistently, year in, year out, hallelujah, I'm down, you know? I think you could do even better than that though. I think you could do like maybe 30, 40%.
And you can run that in an IRA account without being touched with taxes?
Yeah, correct.
So how long? So you couldn't touch it for so long, all right?
Well, there's just tax implications to take it out. Like when you take out money, it's taxes income and there's like a penalty on top of that.
Okay, right, but I mean, but usually you have to wait like 5 to 10 years for the IRAs, don't you? You have to wait so long?
I think in IRA you have to wait until retirement.
Okay, right,
Yeah, it's
retirement.
retirement.
Okay,
Yeah,
all right, thank
yeah. I've taken money out of an IRA before because I wanted to invest in some stuff or I forget what I was doing.
She took a
So you
haircut, I'm
take it out,
sure.
it's just you get taxed.
Yeah, you could take
your
it out.
income.
You just get taxed for it though.
you. Okay,
There's
so
like a penalty for it.
Yeah.
right, okay, so if you say retirement, what if I retire like, if I'm, 56 and I retire with doing this? Wouldn't that be, was that considered retirement or you have to go to a certain age?
No, it's an age thing.
Okay, it's an age, okay.
Yeah. Yeah. So IRA, when can I take out money?
We have to be
Yeah,
65 in the US, don't we?
That's,
Just
if you
59
look
and
it
a
up, I
half.
think it's 59 and a half, you're subject to the 10%. Before 59 and a half,
Okay, awesome.
Yeah.
I got 3 more years. Okay.
you're subject to a 10% penalty, so
Yeah. Yeah.
according to
But
Google.
I mean, that's not like terrible, a 10%
Yeah, that's not bad.
penalty is not the end of the world,
Yeah, that's not
No, if
bad.
you take the money out and you make 15 or 20 or 30% with it, it's great. It's a great investment.
Yeah, that's a great,
Yeah.
that's a great ROI. Yeah.
Yeah, I mean, if you're making, if this thing, I personally think we could get this martingale strategy to make like 30, 40% a year pretty consistently. I have this like feeling that we can do that. It's just by back testing it a bunch of times, I feel like that's possible. If you're making 30, 40% a year in your IRA and it's growing at this consistent clip, I mean, at some point in time you can live off of it, right? So that's kind of my whole thing here. Personally, I have like I have a vested agenda into this. Like what I want to do is I want to get this thing figured out. I'm going to run in paper trading, and then I want to put my own money, IRA money, into this and actually watch that thing grow. And I think this thing could do quite well.
That's an awesome idea too, because that one is a longer trade, isn't it?
What do you mean a longer trade?
You could stay in it for a longer amount of time, the martingale.
Well, this one basically it just trades every day. Every day it's just doing another iron condor every single day. Right. So it's actually more in line with what you say is like, you don't stay in trades for very long. That's what this thing does. It's very short trades. Right. And it's just consistently just like earning you cash every single day. That's what it's doing.
This is the Martindale.
Yeah, this is the Martingale Iron Condor. Yeah.
Okay, I got it. Yeah, Iron Condor Martindale.
Yeah, and I just changed this up because we were running it. I ran it with a 14 delta, and I noticed actually that we weren't making as much money. So I think higher delta is more leverage. Let me actually look this up. Iron Condor is higher or lower delta leverage. You know what, let me ask ChatGPT. What am I doing here? ChatGPT is much smarter. I don't know about you guys, but I can never use Google anymore.
Wow.
Seriously, it's like so much smarter. It's why would you Google, right? There's still something I'm still kind of used to it. It's like it's so ingrained in me. But every time I use Google, I'm like, this thing's just dumb. You know? But ChatGPT just does a way better job. In general, so in summary, higher delta and Iron Condor generally implies a more aggressive stance. There you go. In Google, I would have had to like search through stuff and read things, but here it just tells me point blank. Okay, so I increased the delta, so that should actually give the proper result. Earlier, I did the opposite. I lowered the delta. But in this case, we want to increase the delta. And we should see a much better result from this. So I went from 16 to 18.
Okay.
Yeah. I'm trying to think Herb's strategy. This is going to take a very long time to run. I think he has a bug in his code. You know, we're running someone else's code. I don't know what the heck it's doing. I think we should probably stop this and maybe we'll talk to Herb and see what the heck he's doing. But this is getting some good results here. So what I'll do is I'll make this thing also have the name being more. Oh, actually, I do have that already. Delta required. Pause after loss. Let's try some different combinations here. What if we did like a 20 delta, 1 pause after loss? And we also have this different schedule here. Well, if we ran that, let's see what the results are. Yeah.
So real
I hope
quick,
you guys. Sorry, go ahead.
No, so real quick in a nutshell, this is basically how the class will go, huh? You learn how to do the build the box, learning the language and everything, and just learn how to input stuff like what we've been doing tonight.
Yeah. This is what our Tuesday class is like. So our Tuesday classes are like this, where we're innovating new stuff, right? We're trying to build new things every Tuesday.
Yeah.
Then you guys also have the classes they can watch. So here, let me show you what these classes look like. You can log into the system and you can actually learn about how to build these things. You can learn about how to run them yourself. Right. I'm going to be re-recording a bunch of stuff in the next 2 weeks.
Okay, another quick question. I didn't mean to interrupt you, but just while don't forget your point. Do you also teach, like, what if you're illiterate to definitely day trading and all the options and all that? Do you give a little tutorial on that, or do we just learn that when we're learning the language and stuff, like what to input and what to make work?
Yeah, so we don't teach trading in the traditional sense, and maybe we should even have some classes on that. We teach it more from a data perspective, right? So it's like we'll write it in code and we'll try it based off of like actual real results rather than a lot of trading classes. Like honestly, I think a lot of them are kind of BS on the internet. I'm not gonna lie. A lot of them are like, okay, if there's a hammer pattern, if you see this, if you see that, it's like, well, can you please give me some proof as to why that's a good idea or not? They won't give it to you, right? They're usually just saying, oh yeah, there's you follow a hammer, you follow this, or you follow whatever, right? A lot of them don't have the data to back it up. Where we're focused very much on the data and actually using code to figure this stuff out, right? So here's, for example, if you join our workshop, there's like a bunch of classes here on how to actually set up your first algorithm. So if you join this thing, you could actually go through and set up your first algorithm in here. It's like a bunch of different lessons. You'll go through an introduction, how to set up replit, how to deploy.
Hey, welcome to your first Algo workshop. I hope you're super excited to get started.
There it is, yeah. is like the whole workshop. And then we have like an algo trading class that teaches you how to build trading algorithms. And we have an options trading class. Then we have a machine learning AI class. We have like a lot of stuff teaching you how to do all these detailed things. So, does that make sense?
Yes, it makes sense. Okay, so so to narrow down my question, what would I have to take? What class would I have to take to do what we're doing right now?
So you can take our classes. I mean, go through, start with the workshop.
Uh-huh.
Right? Workshop is number one. It'll show you how to run your first algorithm in the cloud, right? And then after that, I'd go into the algo trading course, which will teach you basically how to code all this stuff, right? And you run it locally. We use a lot of AI with this stuff, so you don't have to like really know that much code, right? You could use our existing code and modify it, or you could use AI to help you out with it. So you don't have to be like this coding genius for a lot of this stuff. I've realized over the years, we've been doing this for a long time. Just the simpler we can make it, the better. So we've been really
Right.
focused on like making this super simple. We don't have to be a coder. You know, it's like really easy to modify and run, right? But I would start off with the workshop, get your first algorithm in the cloud, right?
Right.
Actually see some results, see that thing making you some money, right? And you can kind of go from there, right? And then it's like, how do you build your own and how do you make more advanced ones? And, you know, there's all this other stuff that you can do. You know?
Awesome. Okay.
Yeah. Does that make sense? Any other questions on that?
Oh no, that makes sense. Thank you.
Okay, no problem. Cool. Okay. So here we have this. This one seems to be making a lot more money. Look at this. It's 20% in and it's already up almost $1,000. Whereas the other one, I think it took what until 25 or 30% for it to hit that same level. So it seems like it's making more money at that higher delta. I think it's at delta 18. A delta of 18. Actually, no, this is a delta of 18. I think this one's a delta of 20 even. Seem almost the same. It's 20%, 25, 7. This is 20%, 25, 8. Okay, so it's making a little bit more money. So as we increase the delta, we seem to be making more money. I think if we increase the delta and if we would change this whole schedule here to avoid these big losses, I think we'd have a very profitable strategy on our hands. I would personally love to run one of these things. You know, make like 30% a year pretty consistently. That works for me. You know.
That's like a winner. Yes. Yeah.
Yeah, you know, like
Well, what was the investment?
this one started with 25K. Let's assume you
Okay.
start with 25K.
Okay.
Yeah. If you want to use less than 25K, then you need to modify this a little bit because it violates the PDT rule, which means they can only do, I think it's 3 round trips for a certain stock every week. So you'd have to modify this a little bit to use less than 25K. You can make it, you know, just trade every second day, or you can make it hold for longer. There's like a bunch of stuff you could do with it. It was looking quite nice. Look at this, 25 is at 26K, 26% in, which is what, a month and a half, made $1,000 on 25K. That's like a 10% return in a month and a half. That's very nice. Okay, so I guess we'll wait for this to finish up. You know, I'm gonna go grab a glass of water and use the bathroom real quick. And when we get back, I think we'll be further along with this. This is looking real nice though. Look at this. 32% in, we're at $26,200 already. This thing's making good money. Actually watch this thing grow. I don't know if you guys have been watching this, but you can actually watch the numbers go up. This is like what is doing day by day. It's like simulating this day by day, right? It's up quite a bit already. Okay, I'll be right back, guys. Just gonna grab some water, right?
Okay.
All right, Robert.
All right, hey guys, how's it going?
Hey, hey, hey.
Okay, so we got a result here for the 0.2 delta. It's actually kind of surprising. I expected the opposite here. You're seeing a 0.2 delta had a lower return, but somehow a higher Sharpe ratio. I had a 13% return versus the 0.16 had a 16% return. So a lower return, about the same max drawdown. The volatility actually a little lower. That's strange. I would have thought that a higher delta would be higher returns and more risk, but it seems to have done the opposite. Strange. Okay, we got another one here going. We'll see what this one is. I think this one is an 18 delta, I think, when we ran it. We'll see how that turns out. So far, it's up quite a bit, 28.3. It's quite a nice return. 28,000 is what? 25,000, 28,000 divided by 25,000. It's up already 12%, so it's already up around this point. And this, oh, but this is one pause. That's why. Because we had a 0 pause versus a 1 pause. I didn't realize I changed that. The pause seems to really reduce the returns that we get. This to me seems like a really good strategy. I remember when we ran it once, I forget what configuration it was, but there's something that we ran and it got like a 200% a year return. I forget what exactly we used to get there. I think it was 0 pauses. Delta reduction per loss. I don't even know if we use this. Oops. Adjust the delta. Oh, this is interesting. I forgot we even added this in. We have a delta reduction per loss. So every time that we lose, the delta goes down. I remember when I was talking to Kevin one time, we actually were talking about this. I actually built this in. So every time it loses, it reduces the delta. So I think we don't need this pause. I think we could keep that at 0. I'm going to keep it at 0. I'm going to rerun it at 0. I think we're going to see a much better return off this. Higher delta, so 20 delta, 0 pause between losses. We chop off this big losing streak thing here. So if we lose a bunch, we don't go super deep into debt. And then we have a delta reduction every time we lose, right? And we do that instead of taking a pause. I think that could give us a very nice return. We'll see what the result is here. Actually, I'll even add this to the name that we put in. Delta reduction, we'll have that in there as well. Yeah, what I want to do for you guys, I want to actually run this thing live so you guys can actually watch this thing trading. If you guys are, by the way, for those of you guys that are not part of this, for those of you that are, you'll be able to check it out here in our trading signals. Oops, this thing load up. This is another very nice looking chart. They're all very stable. Look at this. 18 deltas, basically just like a straight line up. Is amazing. It's hard to tell here, but the blue is basically our strategy. You'll see it again in a second. Yeah, there you go. Again, not the highest return, so it seems like a 20 delta, one pause is pretty similar to an 18 delta, zero pauses. They're almost exactly the same. They're the same Sharpe ratio. Return is pretty much identical, actually, which is kind of surprising. Drawdowns, almost exactly the same thing, actually. Strange. 18 delta, zero pauses, and 20 delta, one pauses seems to be exactly the same. Yeah, what I'm going to do is I'm going to run this strategy. I'm going to put this into our trading signals. So for those of you that are part of our trading signals, is going to be another one of these things here. If you have never seen our trading signals, what they are is basically, it's a bunch of our strategies that we run in the cloud. And you guys can watch what they do day after day, right? So here, this is one called Top ETF Picker is what it's been doing. It's up 12% since December 1st. It's a nice return. Stock breakouts, this one's been pretty flat. Crypto EMA trading, this one's been down a bit lately. Crypto got hit pretty hard, just got hit with it. Congress trading, this one's been up. Diversified leverage, this one's been doing the best, I think. This is a fantastic return. Since November 10, it's up 24%. And it's not back testing. This is like it's been trading live, right? So you could actually watch what it does every single day. So I'm going to do the same thing with this Condor Martingale. I'm going to get this thing up and running sometime this week. You guys can watch it. You can copy it. You can actually see not just in back tests, but in real life how it's trading. There's a lot of value in that.
Hey, this is Stacy. I'm not seeing the trading signals on mine.
No?
I had like did the sign up, but I never was able to see it.
So when you go into Discord, can you see the server, trading signal server?
Yep.
And then can you see these channels?
The only one I see is general channels start here.
Okay, so I think you don't have permissions for it. So I'm looking here. Is this one of yours? You're probably one of these people here. Stacy, let me see. Yeah, there you are. You just don't have permissions as a paying member. So what
Okay.
you need to do is you need to go to lumiwealth.com and you need to link your Lumi Wealth to Discord. I'll give you a link right now. So 1 second.
Okay.
Yeah, it's pretty straightforward. You just have to like click on it and it's like, you know, that flow, it's like accept and link. You give it permissions. It's basically one of those things. So here is I sent a link in the chat. So right now, there it is. And when you go here, step one, you already have Discord. Step two, you already joined, you're good. You basically need to do step three. That's the only thing you're missing.
Okay. So I just logged in. I did step 3. It says connect with Discord. So I did it already. I connect again.
Do you see this thing where it says Discord connection? It says disconnect from Discord.
No, I saw where it said connect with Discord. And
Yeah, so you gotta click on that.
okay.
Yeah, what probably happens, you never connected it before.
Yeah, I thought I did, but I guess not.
Hey, Robert, I'm gonna run, but thank you very much, and I'm looking forward to running this martingale on Tradier.
Yeah, sounds good. So yeah, again, I'm gonna put this up into trading signals. I'm also gonna put into our trading our strategies library as well. So if you guys want to run this, you guys will all be able to do this. So be under Lumi Wealth, sorry, github.com. I already put one up, by the way, if you're interested in this. I've been running one of these bots for a while, one of our options bots called rolling options, right? That's already in here. You can like go into here, rolling call options. Either way, github.com, Lumi Wealth Strategies. If you don't have access to this, let me know, and you'll be able to see all the stuff. And basically, you go into here, and running these strategies is very, very simple. All you do is go down to this button, run on Replit, and just click on that button, and then you copy over your API keys. That's it. So it's like super easy to get up and running. If you need help with it, let me know. We can go through it one day.
Okay.
Okay.
All right. Thank you, sir. Have a good night.
No problem. Have a good night.
Yes, I'm connected now. And let me do a refresh. Yes. Now I see him. Okay. I'm good.
Perfect. Yeah, I see that you have the tag now too. Awesome. Right. Cool. So we got some good backtesting results here. I don't remember what our configuration was to get that. There's like that 200% return. I don't remember what we did to get that. Something that we did to get this like really insane return. Delta required. I think the delta might have been like way higher. What if we did like a 25 delta or something? I'm gonna play around with this. What else did you guys want to see with this, by the way? Anything else you guys would want to tweak with the strategy and explore kind of what it can do?
No, but I will make a comment. I was watching a tasty trade video, and they were doing some back testing on condors. And if I remember correctly, I think they said that the 25 delta was the best result for them as well over
Oh, really?
different time frames. Yeah. So maybe that would be something good to try.
Interesting. Okay. So let's see how that turns out.
Okay.
Yeah, because our delta's been way lower. Our delta's been like 16, 14, it's a way lower delta. The 25 is way more risky,
Okay.
but should make a lot more money. So
Okay.
I think we just we avoid it from like having these giant losses. I think that's the main thing. That's the thing with the martingales. You can have these like really big losses. So I want to avoid that. I don't know about you guys, but I don't want to see like 20% of my account gone one day. Like that's not something I want to see ever,
Could you give an insight as why they do that for them? Why the martingale thing is gonna even be helpful? When you're losing, when you lost, you actually increase the position quantities.
Yeah, so the theory behind it is that whenever you lose, when you double down, that when you win at that time, you make up for all of your losses and you win back more. Right. So for example, martingale strategy, I think is better explained when you do roulette, right? Like I use it at the casinos. Whenever I go to casino, I only really do like roulette with martingale strategy. Okay. And what I'll do is I'll put down the minimum there, which is whatever, $5, $20, whatever it is. I say it's $20. I'll put down $20. Yeah. If I win, I keep 20 and I keep going. If I lose, I put down 40. Now, if I win at that point, I make back the 20 that I lost and I get a $20 profit. Right. And let's say if I lose again, I put down 80. Right. If I win at that point, I make back all that I lost plus $20 profit. Do you get what I'm saying here?
Is it because, I mean, is the theory, I understand that's the intention, right? I mean, is the theory behind it, is that like, is the probability of losing, consecutive losing is actually very, very low? Is that what it is? That eventually you're,
Yes.
a strike of losing will eventually end with a strike and a win of a win. And well, when you actually have a win, might as well just wipe out the entire loss.
Correct.
I
Yes,
see.
exactly. That's exactly what it is, right? Now, in roulette, it's a more controlled environment.
Mhm.
When it comes to something like this, like condors, it's not as controlled, right? So there's a lot more details to it. I'm not entirely sure this is the best way to go. The reason why we have the schedule here to begin with is because one of our students, Tony Amos, he came up with this idea. He's like an options trader, is what he does for a living. Okay, he makes, I think he's got like a couple $1,000,000 that he trades with this at this point. He's made a lot of money. And this is what he does to trade, which is we just copied his strategy and just did that. Right. However, now given all these different things that we've changed with this strategy, the different deltas and the pauses and all that, I'm not sure how beneficial that is, right? Maybe that's not even a good idea anymore at all. Maybe it shouldn't be a martingale, right? And you're right. That's a good thing to question, because is that even a good idea or not? I don't know. A typical martingale would be more like 10, 20, 40, 80. It wouldn't be 10, 40, 100, right? Like this is the way that he came up with this is he has this big Excel spreadsheet that he messes with all these numbers and he just approximated them. That's where this came from. That's why I'm like, I don't know if this makes a lot of sense for us to keep. Like we can, I kind of agree with this, right? But maybe what would make more sense is instead of 10, 40, 100, maybe we go 10, 20, 40, 80,
You double
something
it.
like that, right? You double it, but then also you stop at 80 because I don't want to go further than that. And at 80, we just call it that's a loss, move on with life. You know, we do something like that. Like there's different ways that we could play it, right? So even this seems like a lot to me. Like 80 contracts, that's a big loss if that were to happen. This is a huge loss, 1,300, right? You're generally making 10, 10, 10, 10, 10, and then one day you do 1,300. That's huge. Oh, that's this massive loss. That's why when we backtest this over a very long time period, you see this huge drop. Like I personally, I don't know about you guys, but I don't want that. Like I don't want a strategy where I never want something that has a big probability of big loss, right? I always want to reduce my chances of big losses as much as possible, right? So I think this would make more sense personally, right? I'm going to include that in here. We can back test all these different things. I could share this with you guys. The one thing about the strategy is it takes such a long time to back test. So it takes a while for us to get all these results. But I can share all these different things with you guys. Quantities. There you go. I'm going to include that now in the title.
So I just have a thought. I know, just kind of crazy random thought. How about if I understand this the trade or experiment happening day by day, moving forward based on this parameter. I was wondering that if every day what we do is we actually trade every single combination, right? And then just continue doing the trade moving forward. And then after that, do go back and analyze all these various different path with the different parameter, and then determine which parameter is actually most optimal.
Yeah, I think that's a good idea, right? You mean basically try all the different parameters, the different inputs. Like what about 8, 16, 17, 18, 19 delta? Try all those different ones
Yeah.
and all the different combinations. I agree with you. I think that's a very good idea.
Because
the only
then
problem
we
is
can
that
run it overnight.
yeah.
You come back the next
Yeah.
morning, we have all the data instead of keep on trying, running an hour, waiting, change a little bit 1 hour. I don't care it's running like even two days in a row, and then we have we have a complete set of data that here's the most optimal parameters. And
Yeah, I
then
think
we
that's a
run
very
it.
good idea.
Yeah.
I think it's a very good idea. It's hard to do obviously during this class right now,
I
but
understand.
But maybe
But
what
no,
we
my
could
thought
do,
is that that could that I wonder if that could be something that is created as a built-in way of the way uh, the algorithm is being done by simply specifying, like for example in the parameters over there, you specify like a single value. If you can change all of them into a list of values, and then it will just execute every single combination of that list of values, and then being able to actually back annotate it. And then after that, at the end of the whole long run, you say like, here is the most optimal parameter, right? And
I
then
think
we
that
use
makes a
that
lot of sense.
parameter, and then moving forward, and then let's do this thing in the paper trade.
Yeah,
I mean,
I think you're right.
use more of a computer power to do the search, right?
Yeah, I think you're right. I think that's what we should do with this iron condor strategy. Whether to build that into Louisbot, we could definitely build it in. It isn't that hard to do though. Like all you got to do is put a for loop around this, right? So it's actually quite easy to do it, right? But in terms of this strategy in particular, I very much agree with you. I think we need to do that. I think we need to do like this full spectrum of all the different things that are possible and just get the most optimal thing and kind of graph it out. But you're right, it is going to take, overnight or longer, especially with something like this, like an iron condor strategy. It's quite heavy in terms of processing power.
Mm.
So it will take a while to do that. But yeah, I agree with you in general. I think that's a very good idea. We definitely should do that. So if we were to do that, what we would do is basically we'd put a for loop around this. There you go, like deltas, you go 0.14, 1.6, 1.8, 2, right? There you go. Here's all of our different deltas, right? We go pause after losses. We go, pause after loss. There you go, 0, 1, 2, 3. I don't want to go further than that because I've tried more than that. And actually, I know for a fact it's not a good idea. Delta reduction per loss. We could try a different one. Start with 0. Quantities to trades. Right, we try something like that.
Those quantities, are they just in one single trade? I guess because like when I was trading like the euro currency when I was buying the options contracts. So is that just for that one single contract, and you're just doubling up from 10 to 20 to 40?
Yep. Yeah, it's just that one contract. Yeah.
Okay.
Yeah, or the whole condor, right? The whole condor is 10 contracts for each of the four. Right? Because
Okay.
the iron condor is 4 contracts. So it'd be 10
Yeah.
across the board versus 20 across the board versus 40 across the board for all of them, right?
Okay.
So buy 10 calls, sell 10 calls, buy 10 puts, sell 10 puts
10
versus
puts.
20 versus 30. Yeah.
Okay.
Yeah. Okay, so here's the code to do that, right? I can literally just run this and run it overnight and see what happens.
It's
I think
really
you have
that
a very
simple,
good
huh?
point.
This is in which part is this? This is in which function that you adding
I
this?
put this in when we run the back
Oh, in the
test.
main. I see. Okay.
Yeah, in the main, when we run the back test.
Okay. Okay.
So here, it changes parameters. You could also just go parameters equals, right? You can set it like this too.
But
It's like a dictionary.
this one will actually okay, one single parameter you run the entire range of time,
Right,
and then you run the next one and the next one. Okay, so
exactly. It just
I
loops
see.
over each one. So 4 different for loops.
Okay, I was thinking more the other way around. I was thinking more like for each day you're gonna run multiple of those different parameters. But either way, it's okay. Now the data is how are the data gonna be collected differently? We need to maintain multiple buckets now, like one, two, three, four dimensional buckets or something of the results, right?
What do
It's
you mean
not
by
like
that?
because we need to determine which set of parameter gives the best.
Right.
Oh,
So
are
what
we
you
are we
do,
generating like multiple different pair sheet then?
yeah. So what
I
you do
see.
is you
Okay.
collect the result, right? You collect the result each time it goes. And
Uh,
then the result in it will give you the compound annual growth rate and all the different metrics. And you save that to like a CSV file, right? And then you can analyze the CSV file afterwards.
I see. Okay, okay.
Yeah. Yeah, that's basically what it looks like. So it looks like this, right? There you go. So now we get the result and we'll go save the results to a CSV file. All right, we do something like that, or better yet, we'll do like a results DF, right? Start off with pandas, import pandas as PV. Right, then we generate like a data frame and we constantly just save this to the,
Mm.
the data frame, right? Append result. I think it's like results dot something. It's not exactly results. We can do a breakpoint here. I can see exactly what that looks like. And then you save this to a data frame or save this to a CSV file.
So is this like running a report as opposed to looking at profits?
What this is it's back testing with different configurations, right? So let's
Yeah.
say you have a strategy. Okay, do I want to use a 15 delta or 16 or 17 or 18? Well, why don't we try each one of them, back test it, and see what the results were for each one? That's
Yeah,
what
that
it is.
sounds like a report to me.
Yeah, I guess so. Yeah. Yeah. It depends what kind of report you mean, but yes. Yeah. Yeah. This way we could see which one is the most optimal. So
Yeah,
far, it's looking like this one was the best. This one back here. The 16 delta zero pause. This one had the best results. 377 Sharpe ratio, which is very high. 16% return, very stable. You know, this is looking like the best so far.
pick like the top three or something like that, or you just pick the best one, or you just pick the one that's giving the best yields.
Sorry, what was that? It's kind of hard to hear you.
Oh, my fault. Would you pick like the best one or like best three or just the one that had the best yield that you see? What's the method of choosing the different, like if the Delta 16 was successful, but then you saw maybe Delta 19 had a pretty decent. Would you run between those two or would you just pick the 16?
I would just pick the best one personally,
Okay.
right? Because they're all going to be doing kind of the same thing. You might as well get the best one, right? That's the way I think about it, right? If it was a different algorithm, right, then I might do both at the same time, right? We have different algorithms. Like we have another one called rolling call options that also does really well. I would run those together because one of them does really well in one scenario, the other one does well in a different scenario, right? So in that case, it makes sense to run both of them together because they together as a team work better, right? Whereas this, it's the same algorithm, just different adjustments to it. I would just pick the best one. Does that make sense?
Oh, yes, sir. Yeah, that's right.
They're all kind of moving the same direction, right? They're all doing the same thing, right? So just pick the best one, right? And then I'd pick a different algorithm and pick the best one of that and then combine those two.
I got you. I got you.
Yeah.
Instead of putting your eggs all in one bucket, you're splitting it up a little bit.
Yeah, exactly.
Diversification. Okay, okay.
Yeah, exactly. Diversification. And it doesn't make sense to diversify in this algorithm by itself because it's doing the exact same thing. If one loses, the other one loses too. You only get benefits from diversification when there's something different, right? So I would pick the best one of this and get the best one of a different algorithm and the best one of a different algorithm and run all those together, right? As opposed to, trying to have different configurations of this one. I just want to get the best one of this one. Yeah.
That's awesome. I got it.
Yeah. Cool. So far, it's looking quite good. It's up a lot. We're 67% through. It's up almost to 28,000. That's a very big drop, very big gain. That's what, 4 months, basically 4 months, and it's up 2K. So 2,000 over 25. It's up 8% in 4 months. That's very good. That's theoretically 1.08. If it's 4 months, you go to the power of 3. That should be about 26% a year if this continues on. That's a very good return.
What was the delta on this one?
This one, it's hard to tell right now because it doesn't show here, but I think it was the 25 delta.
Oh, wow.
Yeah, like way higher.
Oh, yeah.
Yeah. 25 delta, 0 loss, 2% reduction per loss. I think this is a very interesting parameter here. And then there's a quantities. Actually, no, it still had these quantities to trade 10, 40, 100. There's a lot of
Does it
different
have
like
the
configurations
zero
you try.
pause on it?
Was that?
Does it have the zero pause on it? The pause
Yeah,
at
it's a 0
zero?
pause. Yeah.
Okay.
Yeah, so it doesn't take a break in between. But what it does do is when it loses, it reduces the delta, right? So every time you lose, it reduces. So you have a higher probability of winning the next time, right?
Mm.
It was interesting. I think Alex is right. We need to run this thing like with all the different configurations and just run it overnight and just see what the best one is. I think that's the best move from here. That's what I really want to do. Just pick the best one. I'll get the best one. I'll share the results with you guys up on Discord, what the best result is. And I'll put it up into our strategy library so you guys can run it. And I'll put it onto Tradier and actually start trading it and you guys can watch it.
Oh,
But
yeah, on the
that'd be
paper
cool.
trade.
yeah. What was that?
No, I was saying we could watch it on the paper trade. Is there
Yeah.
anything standard that you think should be in all of these codes that we're writing? Because I'm thinking like the pause at 0. Do you think that's something that should just be standard in all of them?
Well, pause at 0, I think is something that's or the pause after loss of 0. I think
Yeah.
that's something very specific to a martingale strategy. We have so many different strategies. Like I feel like a lot of people ask me this question. It's like, well, what would you do a stop loss or whatever? It's like, well, every strategy is different, right? And this
Mhm.
strategy in particular has this thing like, okay, there's a fixed concept of a win or a loss, right? And maybe in that situation, maybe that's a good idea to put in a lot of these types of strategies. Like if you lost a few times in a row, just bail, maybe that's a good
Right.
idea in those types of strategies that make sense. But there's a lot of other strategies that they don't have a concept of win or loss. They're more like just long-term in nature, where it's like changing what you own. Like this, for example, this top ETF picker, right? This one's been doing fairly well. Okay, it's up 12% since December 1st. It's doing quite well. So 2 months, 12%, pretty good, right?
Right.
Now, this one has no concept of win or loss. It's just changing what are the 5 that it owns. These are the 5 ETFs that it owns right now. And it's just constantly changing those. So it owns TQQQ, it owns LabU, and these are all like really good ETF. I actually own TQQ. I've owned this for a while. It's made me a lot of money personally. I've made, well over 20K on this one ticker. But actually probably a lot more than that. What am I talking about? Either way, very good tickers in general, but this isn't like, it's not like a win or loss thing. It's like, what do you currently own? And if one of them sucks, you just drop it and put a new one in. Right. And that's a
Okay.
very kind of trading strategy, right?
Yeah.
That doesn't make sense, pause loss, because there's no such thing as a loss, right? It's
Yeah,
just
you're just
what do
dropping off
you
one and picking up the other one.
right, exactly. Right. So it depends on what you're doing. But yeah, I think the whole idea of like pause after loss would make a lot of sense for like a win-loss type strategy. I think that probably would be a good standard thing to put in. But again, it depends on what you're doing, right?
Well, I'm thinking of the stop loss with contracts and being stuck in a trade. That's why I'm like, I mean, for options, if you're like, want to make sure that you don't get stuck in a trade and you have a stop loss set, if the zero pause would be standard that you would put in all your option trades when creating a bot for those trades.
Yeah, that I could see something like that. Whenever you place like an options trade, it can be monitoring it and make sure that you're not, losing money or you get out of it before a certain point. I think there's a lot of different things you can do with it, right? Like you can have a specific parameter that says you exit before expiry. You can have specific parameters around exit when you've lost a certain amount. There's a bunch of different things that you can do, right? When it comes to options, again, it depends on what you're doing, right? Like it's a very like broad thing,
Yeah.
I'm happy you say that because saying that it's broad, coming in new, how do you narrow it down? Or would I just maybe follow your lead or some other people lead in the group or something? Because yeah, that's real broad. How, just coming in brand new and brain, to this.
You mean like what would you use like right out of the box?
Yes, exactly. Like how,
That's actually a very good question. I've actually never really thought about that. I mean, whatever strategies we put up, the defaults are usually set to the ones that I would be using, right? So whenever you run, like for example, you go into this, I showed you strategies. Where the heck did they go now? If you go into GitHub, Lumi Wealth strategies, right? All these strategies in here, the defaults are already set to the ones that have the best result we could find, right? So for example, this options rolling calls one, you go into here, the defaults are already set good. So here's the results of it. This is, that doesn't necessarily mean it's the best one for you,
I mean,
but
if it's
for
successful, I
me,
can grab it and I can post it and run with it. I mean, if it's successful, it's to help me like a learning curve for me, right? Fair to say.
yeah. So investing is a very personal thing, right? Like there's no such thing as the best algorithm for everybody. It's depends on your risk tolerance and because there's uncertainty involved, right?
Right, exactly, exactly.
If I knew what was going to happen in the future, if I had a crystal ball, then we all have one algorithm, right?
No,
There's
yeah, I
just
get it,
you
right.
follow this one,
Most definitely.
right? Yeah, but the fact that we're operating under uncertainty changes that, right?
Right.
So,
I mean,
most of these things that
you
we
only want to
built,
invest as much as you can, you can afford to lose. I understand all that concept. I understand that.
right? Yeah. Right, exactly. Oh, this sharp ratio went up, I think. Yeah, actually, no, this is the same. For some reason, this isn't changing. I increased the delta and it's not changing. Still doing the same. Delta 2.2, 0.18, 0.2, 0.25 is all giving us the same results for some reason. I think I need to investigate that a little bit. Okay. Either way, personally, I think the next step from this would be what Alex says is run this thing in a loop and see what the results are from all the different configurations, right? Because to me, this actually looks pretty good. Like I would put my money into something like this. I'd be very happy with putting my money into something that makes consistently 15% a year. I'm happy with that. That sounds very nice to me. Very low risk, or at least showing based off of this historical range. I would personally want to actually make it a little higher. I'd want to make maybe more like 25, 30% a year personally, if it could be almost as stable, right? So what I'd like to do is I'd like to run this overnight and kind of see all the different results. But what do you guys think? What are your thoughts on this so far, and what would you want to see?
25 is kind of risky, but
That's what I mean. Everyone's different, right? It depends.
yeah, I'm just like, it's kind of risky, but I would like to see what it does overnight. Definitely.
Yeah. Because then you have the whole spectrum and you can make that decision yourself, right? This is why, when Royal, when you're asking, you know, which algorithm should I use? I mean, that's really up to you, right? Like, first of all, I can't legally tell you what to do, right? I don't want to tell you what to do. You pick yourself. I could tell you my opinion, what I think, right? But the ultimate decision rests with you, right?
No, Robert, you told me to use this one. I lost $30,000, so
Right.
I
Yeah,
have a
exactly,
problem
right.
now.
Exactly, right. And there's some people that they'll lose 30K and they don't care, right? Because they knew they were going in. It's a risky thing to begin with, and that doesn't matter to them.
And
But to
that
some
sound like
other
me.
people, losing 30K is like the end of the world.
No, that sounds like me
Right?
what you just said. I mean, I know I'm taking a risk, so I'm gambling. I'm taking a risk, so I'm gonna win, I'm
Yeah.
gonna lose. I'm a risk taker. Let me say
Yeah.
that. I'm a risk taker.
I think most of the people in our classes are risk takers. You kind of need to be, if you weren't a risk taker, you'd go to Fidelity, right?
Yeah.
You know what I mean?
Yeah.
Go
No,
talk to
I'm
one of
a
their investment
grandma.
advisors and move on. Yeah. So yeah, I mean, me personally, what I'm most excited about in terms of our algorithms is this one right here, the Martingale strategy. I would like to figure out how to make this thing make like 20, 30, 40% a year and put not a large amount of my money into it. I'll put like 25K, which is not a huge chunk of my change. I'll put 25K into it and I'll just watch it grow, right? And that'll be great. And I'll take money out periodically and we're good to go there, right? And then I want to put a bunch more of my money into this other one that I was showing you, this rolling call option. I actually want to put some of my money into this. This one's quite nice, 21% a year, very nice returns. So we have one making like 20, 25% a year. I have another one making 20, 25% a year, but they're doing it in different ways, right? Now that's the beautiful thing, right? When one of them screws up, the other one probably is going to do all right. When this one's screwing up, the other one's going to do all right. So now we have two strategies making like 20 to 25% a year. I'll throw in another one. There's also diversified leverage strategy, which is doing pretty well. I have some money in that. I put another strategy that does crypto, and I want to aim around 20 to 30% a year personally overall. And I'm going to have a bunch of different strategies doing that. And I can diversify that way. And if for me personally, if I can make 25% a year for the rest of my life, I will have a freaking gigantic yacht and an island, and I don't have to worry about it for the rest of my life. You know what I mean?
Offshore account too. Huh?
Yeah, exactly. Right. So to me, that's great, right? The stock market does 10%. That makes people very rich. If you do the math on 25%, like let's put it this way, if you took your money, actually, let's do the actual math. Okay. Let's say start off with 10K, like a modest amount of money, and you invested at 10% a year for, let's say, 20 years or something, right? Okay. You'd end up with $67,000. Okay. $10,000, 10% a year for 20 years. You did the same thing, but instead 25%. A lot of people think that's like, okay, you're going to get like double, triple the amount of money. It's way more than that, right? If instead of making 10% a year, you made 25% a year, you end up with $867,000, which is 67 versus 867. Right. And now instead of 20 years, you could think 30 years, right? This is now, what is this, 8 million, right? It's over a longer time period. Or if we started with more money, like this increase from 10% to 25% can make a very, very big difference in your life. That's the way that I think about this. Right. Here's 30 years, 10%, 30 years, 10K turns it to 174 versus 10K turns it to 8 million. Right? Very big difference, right?
Right.
That's the difference between, you're feeling all right at retirement versus you have a very nice yacht and, you're having the time of your life kind of thing, So that's the way that I think about it, right?
That makes sense.
Sorry, what was that?
You made it make sense. Oh, actually, you
Yeah.
made it make millions. You made it make millions.
Yeah.
Hey,
By the way, the best investor that I know of, Jim Simmons, 65% a year. 10K after 30 years turns into, what is this? 334 million. It's insane. That's why this guy's one of the richest people on earth because he makes 65% a year. If you read up on him, Jim Simmons, he's part of the Forbes list now. He's like number 40 on the Forbes list. And he does exactly what we're doing. He does trading algorithms, and he's been doing this since like the 80s, and he's very, very good at this stuff. He's like a multi-billionaire, you know? This is how he's able to make it.
Wow,
Yeah.
amazing.
Yeah, this is $33 million instead. It's crazy. It's a ridiculous amount of money. You can make 65% a year. That's to make 65% a year though, that's really freaking hard. You know, like I'm not even aiming for that. Personally, I'm like, if I can make 20-30%, I'll be very happy personally. And so would I think a lot of our investors. We're looking to raise a hedge fund, and I think our investors would love this stuff. You know?
It's a dumb question, but she making 65%. So you saying that these AI bots couldn't get it tapped into the half of that? Well, you said it's about 25, 30, so that's just about half, I guess.
Yeah, that's what I'm aiming for. Can we do better? Maybe we could do better than that. Maybe it's possible to do better than that. But that's I don't know. That's personally what I'm aiming for.
Okay,
Based on what I know, that seems to be like
right,
within
right.
reasonable.
Like I said, it was a dumb question, but I had to just throw that out there. Just how he could make 65 and everybody else is like below, way below that. Like,
How do you make 65% a year is the question.
no. I was just saying it's just amazing that he's making that much.
Oh yeah.
Everybody else is much much lower than, way below that. Like
Yeah,
he's
I mean,
talking about he's
this
making
is why
billions.
he's one of the richest people on earth. You know what I'm saying? Like
And
Forbes.
he acquired that. He acquired that himself. He self-made, or did he is he self-made from that?
I think so, yeah. Yeah, I think so. So if we go here he's worth $30 billion, this guy. What number is that on the Forbes? This is him, Jim Simmons. He's like the pioneer of our field.
Wow.
Yeah, he's the guy that like invented the whole like trading algorithm thing. And he's worth $30 billion.
Wow.
Yeah, wealth history. Look at this. It's just flying every year. Up, 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 up.
85.
Yeah, self-made score 8. I don't know what that means. What is self-made score? Oh, so I guess he's one of the best self-made people in all of history. I think is what it is,
I guess so.
or currently alive. Yeah, so it's like, did you inherit money, this and that? I don't think he inherited money. I don't think he like came from money. I don't think his parents are poor either. He's like he was like a mathematics professor before he started this hedge fund. So I don't think he was poor, but I don't think his parents had like a ton of money. Like if you're thinking like his parents are like multimillionaires, I don't think they were.
Okay.
Yeah. It's very impressive what he was able to do. This is to me, this is the type of person I look up to. I want to try to build this sort of thing.
I'm with you, 30 billion. Wow.
It's not bad, right? You know, 30 billion bucks. Wouldn't mind that, you know.
Nice walk in the park.
Hey, Robert, I got a quick question.
Yep.
So I'm running this bot, and I'm running in like live trading, and so I'm trading Bitcoin, but it says sleeping until the market opens. If I'm trading Bitcoin, should it like be open all the time? And I'm using
Well, that's judging based off of this thing at the top here. Self dot market, I think is what it is. Self dot market, set market. Yeah, it's based off of this. You got to go self dot set market 24/7 to make it run 24/7. But by default, it trades on the NYSE time frame.
Okay, so self, I'll tell you what thing. You just saved me a lot of headaches. Just
Glad I could help, man. Yeah, because by default it trades off the NYSE time frame, but when you set market, you can change it to be 24/5, 24/7. You can make it US futures. There's different time frames you can have it trade on. So if you're
Okay.
trading Bitcoin, you should change it to be 24/7. But keep in mind, I don't know what strategy you're running. Maybe there are, like, I know one strategy in particular that like trades Bitcoin but also trades stocks. So that's maybe why it was set to be NYSE.
I started off trading stocks, and then I changed it to Bitcoin because I wanted to see it run.
Okay. So yeah, you want to change this. You want to go self the set market. That's what you want to do.
Okay.
Yeah. Cool. Okay. Well, this has been fun, guys. What I'm gonna do is I'm gonna run this strategy, like Alex said, in this loop. I'm gonna try out all these different combinations, and then I'll post it up into Discord and I'll let you guys know what the results are. All right. And then after that, what I'm going to do is I'm going to take the best performing one and I'm going to put it up into Replit in the cloud so you guys can follow it. And I'm going to put it into our strategy library so you guys can copy it and run it if you want. All right.
Would it make sense to run it in the longer time range? Because I think you're running
Yes, it would.
2023, they're all in the like bullish,
Yes,
uptrending.
absolutely.
So I would like to see also 22, for example, or maybe even the older one where things kind of a bit mixed up. Yeah.
Yep.
21 is good. 2111 or 20, yeah, either one.
Yeah, we can go back up to 4 years. So it's what, 24, so we can go 2020, 3-1,
4
2022,
years, I think.
3-1. Right. I think we can go back that far. It's a good point. So I'm going to do that. This will take a long time. I think it'll take longer than just one night. This is so yeah. But I'll let you guys know what the results are.
Okay, cool.
Hey, I appreciate
Thank you.
everything, Robert, man. Our pleasure. It's a pleasure, man. Very much pleasure. You will be here for much soon because this is very interesting.
Yeah, no problem, man. I'm glad you like it. This is we're trying to change the world here one step at a time, right?
Yeah, and I definitely want to get aboard with this. Yeah, I like this idea.
Awesome.
Hey, thanks again. I appreciate everybody. Okay, take care.
Yeah, no problem. All right.
Okay.
Have a good night.
Okay, too.
All right. Good night, guys.
Good night.